Okay, good evening everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagudia. Now, before I start the discussion, if there is no issue with the sound, give me a thumbs up so that we can start. Okay, thanks. Let's start. So, we are discussing the concept of international trade. And in the international trade, yesterday, what we have discussed? We have discussed the idea of exchange rate. What is exchange rate? Representation of one currency in another currency. That's it. Right? How do you represent one currency in the form of other currency? That is called as exchange rate. Now, why do we require exchange rate? Because I told you, we basically follow a model called as a open economy. And because there's an open economy, money will flow into India, money will flow out of India. Hence, we need to convert rupees into dollar and vice versa, that is dollar into rupees. Then we discussed on what basis do we decide the exchange rate. Right? For example, yesterday we discussed the idea of a fixed exchange rate. In fixed exchange rate, what do we generally see? In fixed exchange rate, we see that the government will determine a particular exchange rate and will try to move towards or achieve that exchange rate itself. That is fixed exchange rate. As against this concept, there is a floating exchange rate. And in floating exchange rate, what will happen? In floating exchange rate, the market forces, that is supply and the demand for the currencies, they will determine what is the exchange rate. That is basically the floating exchange rate. And in the context of India, we do not use a pure floating exchange rate. We use a model called as a managed floating exchange rate. That is, if you remember yesterday, I told you, Reserve Bank of India, RBI, every now and then, whenever there is a need to adjust to reduce the volatility of the currencies, will basically intervene in the market, try to either sell dollars or purchase dollars in order to stabilize the exchange rate. After that, we have discussed the concept of balance of payments. Right? What is the balance of payment? It is a systematic record which is maintained by Reserve Bank of India. And in this record, we keep all the transactions which will lead to inflow of the money into India and outflow of money from India. We divide the balance of payment as per again RBI. We divide the balance of payments into two accounts. One is basically the concept of a current account, wherein we'll keep all the transactions which will have an impact on the national income of a country. We'll keep it there. In addition to this, we'll also have a capital account wherein we'll simply keep all the transactions that will have an impact on the assets and liabilities of a country. In addition to this, what is current account surplus, current account deficit, balance of payment surplus, balance of payment deficit, right? What is sale of official reserves, right? Whenever we say forex reserves have increased, what is the meaning of it? When we say forex reserves have decreased, what is the meaning of it? What is a trade surplus? What is trade deficit? What is essential import, non-essential import, etc., etc. We have discussed. After that, we started with the concept of NEER and REER. Right? That is, before this, we discussed nominal exchange rate and real exchange rate. The basic idea here, nominal exchange rate basically refers to in the market what is the exchange rate for every currency. 1 rupee is equal to how many dollars and $1 is equal to how many rupees. That is called as a nominal exchange rate. Whereas if you move from the nominal exchange rate to real exchange rate, we will talk in terms of exchange of goods. We are not just covering only currencies there. We'll talk in terms of goods. That is, how many goods in India is equal to one good outside India. Let's say USA. How many goods in India are equivalent to one good in UK? That is basically comparison of goods. And that is called as a real exchange rate. Now, after that, we started with the idea of a effective exchange rate, EER, effective exchange rate. And what is the basic idea of effective exchange rate? I hope you have revised it. Until now, we have always compared one currency with another currency. We have done only this, currency with one currency with another currency. But what I proved yesterday was that rather than comparing rupee with dollar, what we need to do is compare rupee value against, let's say, pound, with euro, with yuan, with yen, etc. Which means I'm taking Indian currency on one side and I'm comparing this with basket of currencies. Simple. With basket of currency. That was one point. Second point that I added to this was, should we simply compare Indian currency with a basket of currency? Will that be sufficient? Answer is again no. What we need to do is, in addition to the basket of currencies, we also need to compare how much is the trade weight. How much is the trade weight? That is, if you remember yesterday I told you, imagine India will conduct 99.99% of trade with, let's say, USA in terms of dollars, and only 0.001% of the trade in terms of euro, which means, right, if there is an exchange rate change in terms of dollars, the impact of that on India's trade, India's exchange rate will be much higher. That is basically the idea. So first one is what? Basket of currencies. Second one is the trade weight. And the third point that we discussed yesterday, I hope you remember, that is basically the concept of the index. The idea of an index. That is, if you remember it correctly, I told you, imagine $1 is equal to 50 rupees. And if it becomes $1 is equal to 60 rupees, if I talk it in terms of index, that is, if I represent this in terms of numbers, I said $1 is equal to 50 rupees. I can simply write it as 100. Then automatically this will become 120 units. Yes or no? And if it becomes $1 is equal to, let's say, 45 rupees, then this 100 will automatically come down to 90. Do you remember this? Right? Yes or no? And I simply told you, if it moves from 100 to 120, the index representation is what? It simply means rupee is depreciating. Rupee is depreciating. And if it moves from here to here, it simply means rupee is appreciating. Rupee is appreciating. And so this is where we stopped yesterday. Let me continue. Now in this case, please understand, I'm comparing dollar with rupee. I hope you understand. I'm comparing dollar with rupee. Can we reverse it? That is, can we put, let's say, hypothetically, 1 rupee is equal to, let's say, $0.8. Simple numbers. Let's say 1 rupee is equal to $0.8. I'll simply call this as 100 units. Now I'll write 1 rupee is equal to, let's say, point, right? Let's say rather than a point, I'll write $1. Please tell me, 1 rupee is equal to $0.8. Now this has become 1 rupee is equal to $1. What has happened to the rupee value? Has the rupee value appreciated or depreciated? Please look at it and tell me. If 1 rupee is equal to $0.8 and now it becomes 1 rupee is equal to $1, has a rupee value increased or decreased? Let me know, has rupee value increased or decreased? Can I say rupee value has decreased here? Any difficulty? Rupee value has decreased, right? Even if you are doubtful now, until yesterday, for $0.8, you could purchase 1 rupee. Now, same 1 rupee, you can purchase it at $1. So what has happened to value of rupee? Value of rupee has decreased. Any difficulty? Any difficulty? Can I go forward? Now, can I also write it in terms of indices? Can I write it as 125? Think of it. 1 rupee is equal to $0.8. 1 rupee is equal to $1. Can I simply say it has moved by 125? That is, from 100 it has become 125. But what is the meaning of it? What is the meaning of this? Value of rupee has gone down. Value of rupee has depreciated. Yes or no? Arey Baba, how 125? Right? Basically, what we discussed yesterday, we are revising it. Right? 0.8 is equal to 100. $1 is equal to how much? Did we not discuss this? Did we not discuss this yesterday? 0.8 is equal to 100. $1 is equal to how much? Use the calculator. Open, right? Open your mobile. There is an app called as calculator. Use it and tell me how much number you will get. Right? Yesterday we have discussed this. If you don't revise, everything will be new for you. But what is the meaning of this? If 100 moves or 100 becomes 125, can I directly say rupee value has decreased? Let me know. In this index, if it moves from 100 to 125, can I simply directly say rupee value has decreased, rupee has undergone depreciation? And if it goes opposite side, rather than 100, it becomes, let's say, 90. From 125, it will fall down to, let's say, 110. Can I simply say rupee value against dollar has increased? That is the meaning of the index. Why I'm discussing all of this, none of the books have given it. I know for a fact, none of the books have given it. But please tell me, if I'm putting rupee on one side and I'm comparing the basket of currencies on the other side, if value of this, that is the value of the basket, goes up, can I simply say index has gone up? Let me know, I'll repeat it again. I'm putting rupee on one side and basket of currencies on the other side. The value of the basket goes up. Can I say the index will also go up? From 100, it could go up to 110. From 110, it can go up to 120. Yes or no? Same calculation. And if that happens, can I simply say rupee is getting devalued, the basket of currencies on the other side is getting strengthened, rupee is getting devalued? Any problem with this? I'm sorry, depreciated, not devalued, depreciated. Devaluation means government, no, depreciated. So whenever you talk about indices, please understand this now. Both the NIR and REER, and those who are finding the calculations difficult, leave it. UPSC will not ask you the calculations. Trust me when I say this, UPSC will never ask you these calculations. Simply don't worry. Now, what is the meaning of this? Let me show, right, a simple statement to all of you. Right, please understand this. Rise in NIR indicates that a domestic currency is appreciating, and right, this is against a basket of currencies of trading partners as well as vice versa. That is, simply by heart this. Whenever there is NIR is an index. NIR is but nothing but index. For example, I showed you 100, I showed you 125, I give you a number 130, 140, etc. like this. Whenever you're looking at NIR is nothing but index. And those who are typing, sir, what is the long form of all of this? Please have a look at this. NIR stands for nominal effective exchange rate, and REER stands for real effective exchange rate. I'll repeat the statement here. Nominal effective exchange rate, that is NIR, and REER is a real effective exchange rate. Both of them are nothing but indices. Again, those are asking indices. Do you remember GDP growth rate? Let me know. Do you remember GDP growth rate? GDP growth rate is nothing but an index. Right? What about CPI? CPI is also index. What about WPI? WPI is also an index. So index means what? We are comparing numbers. We are simply comparing numbers. And both NIR as well as REER, both are indices. Both are indices. And what is the meaning of it? In case of NIR, we are simply comparing rupee against basket of currencies with the trade weights, with the idea of trade weight. And whenever NIR index increases, that is rupee on one side and this number on the other side, if this index goes up, it simply means rupee is appreciating. And if this decreases, that is a NIR index decreases, rupee is depreciating. Any difficulty? Please do let me know right now. And those who are finding calculations difficult, leave it. Do not by heart calculations. It is of absolute no use for you. Do not by heart calculations. UPSC will never ask you calculation. UPSC once in the last 5 years has asked the idea for REER. But when it moves up, goes down, index is important. Don't by heart calculations. So I'll repeat it again. Rupee on one side, basket of currencies on the other side. Basket of currencies on the other side plus trade weight. That is basically an index. That is what was the value of the basket in the base year. That is 15 and 16. We will take that as a base. That is 100. And now how it is moving. Is it increasing? Is it decreasing? So remember this next point carefully. Again, do not worry about calculation. If NIR index goes up, if NIR index, that is NIR number, goes up, It simply means rupee is appreciating against basket of currencies. And if near number goes down, it simply means rupee is depreciating against basket of currencies. Any difficulty, at least by hearting these two statements? Any difficulty? Let me know. Any difficulty, at least by hearting this statement? Simply remember this. Simply remember this. Beyond this, don't go anywhere. Do not by heart calculation. For example, if you remember it yesterday, before I wound up the class, I gave you two formulas. Do you remember the two formulas? That is basically, I gave you pi, right? Ni is equal to 1, and within the bracket, I gave you E upon Ei and whole bracket Wi. This is the formula for NIR. Those are asking, right? Sorry, yesterday I skipped the class yesterday, right? So this is a formula. Should you calculate using the formula in UPSC? Let me know. Should you use this formula to calculate in UPSC? And do you think UPSC will ask you this? No. I will only cut it so that people will not start by hearting because it is there in the slide. So calculation is not required. What is needed? NIR is an index. We calculate what is happening to rupee compared to basket of currencies. If NIR index goes up, then it simply means rupee value against basket of currencies has gone up. If NIR index goes down, it simply means rupee value against basket of currencies, right? Rupee value has gone down. Simply by heart this and move forward. Now, there is one more idea here. That is basically the concept of REER. So far, we have discussed the idea of a NIR. There is one more concept called as REER. What is REER? Real effective exchange rate. Real effective exchange rate. Now, please tell me whether the value of rupee has gone up or gone down. That is appreciated or depreciated against a basket of currencies. Can that only determine what will be your trade competitiveness? Please tell me. Look at it, and we have discussed all of this yesterday also. Value of rupee against a basket of currencies either has gone up or gone down. Don't worry. Will only that determine what is your trade competitiveness? Answer is no. Only that cannot determine what is trade competitiveness. Right? What can determine the trade competitiveness? Value of rupee against a basket of currencies. That is first factor. Second factor has to be the trade weight as usual, because you want to find out, right, how much trade you are doing with other currencies. And the third factor, don't you think price levels in different countries will also have an impact on export competitiveness? Let me know. Price levels of basket of commodities will also have an impact on what is your export competitiveness. For example, right, your friend is back. We used the same thing yesterday also. I told you real exchange rate. Please go back to real exchange rate. In case of real exchange rate, I told you, if the price of the bottle in USA is, let's say hypothetically $5, but a similar bottle in India, the price is, let's say, 50 rupees. I'll ask a question. Follow this carefully. Price of this bottle in USA is $5. A similar bottle in India will cost 50 rupees. And if exchange rate is $1 is equal to, let's say, 30 rupees, please tell me, don't you think the price level will determine whether we will export to USA or we will import from USA? Yes or no? Will the price level also determine, right, one factor which will determine whether we will export or import? Right? Can I prove it? Please have a look at this same example. $5, $1 is equal to 30 rupees, which means this bottle in USA will cost how much? 150 rupees. Whereas in case of India, it is only 50 rupees. Don't you think in this situation, we will end up exporting the bottle? So again, basic idea is simple. Exchange rate, the trade weight, as well as the price levels in different countries will determine what is the trade competitiveness. In the concept of real exchange rate also, we found the trade competitiveness. But if you remember it very carefully, we again compared in the real exchange rate dollar with rupee. Do you remember this? In real exchange rate, we did not take basket of currency. In real exchange rate, we simply took only one currency. We did not take basket of currencies. But again, same argument. Only one currency will give you the trade competitiveness. Don't you think you will trade with, let's say, Europe, which means euro will be converted to dollar, dollar will be converted to rupee. So will this exchange rate affect our trade? Let me know. Will this exchange rate affect a trade with Europe? Of course, yes. Do you remember this? I've explained this also, right? What about, let's say, yuan with, right, let's say dollar, and then with rupees? Will this exchange rate affect a trade that India conducts with other countries? Of course, yes. So that is the reason in real exchange rate, we took only one currency. Now we'll take basket of currencies. Now again, we'll take basket of currencies. That is basically the concept of real effective exchange rate. And in case of real effective exchange rate, please have a look at this. I've given the definition here. It is the weighted average of nominal exchange rates adjusted for inflation. Inflation is nothing but price levels. Do not by heart the formula. I can give you the formula, but it is absolutely waste of your time as well as resources. For example, REER, they will write like this. For optional paper, this is how we will give the right calculations. REER is equal to pi, NI is equal to 1 within the bracket E upon EI, P upon PI, whole bracket weighted, right, index. This is how the calculation is done. Will UPSC ask you this calculation? Again, the answer is no. But please make an observation. We adjust it for weights. We basically take the price levels, as well as we also take, right, the exchange rates. Nominal exchange rates, price levels, as well as trade weight. That is exactly given in the formula. So real exchange rate is the weighted average of nominal exchange rates adjusted for inflation or price levels. Here also we take basket of currencies. Who will give you NEER as well as REER? Both are indices. Who will calculate both of them and publish in India? Reserve Bank of India. RBI publishes both REER as well as a NEER index and publish it in the public domain. And for publishing both NEER and REER, there are two baskets of currencies. In one calculation, we take only 6 currencies. In the second calculation, we take 40 currencies. And the reason is simple, right? How many of you believe that? Let me know. How many of you believe that we will use all the currencies to trade, plus we will have same volume and value of trade with all the countries? Let me know. Right? India will conduct trade with Europe. India will conduct trade with Japan, China, USA. Do you believe that the same amount of trade will be conducted with all of them? Of course, no. With some of the currencies, large amount of trade is done, right? That is countries. And with many of these countries, very negligible amount of trade is done. That is the reason first group will consider 6 currencies, then calculate one index. Second group will consider 40 currencies and publish one more index. That is basically the concept of REER index that is published, NEER index that is published by RBI. But what is the meaning of this index? If it goes up, if it goes down, what is the implication? Please by heart this statement as well. Please by heart this statement. Whenever REER increases, it simply means exports have become more expensive and imports have become more cheaper. I'll repeat the statement. Whenever REER increases, when REER will increase, it simply means exports have become more expensive and imports have become more cheaper. And again, you do not have to buy at this separately, because if you remember, please tell me, if real exchange rate increases, what will happen to trade competitiveness? Let me know. If real exchange rate increases, what will happen to trade competitiveness? Will your trade competitiveness increase or decrease? It will basically decrease. That is exactly same applicable for REER as well. Same is applicable even for REER. If REER increases, the exports will become more expensive. More expensive means what? Export competitiveness will go down. And what will happen to imports? Imports will become much more cheaper. Exactly like real exchange rate. Done? Right? That is basically the concept of near as well as rear. Okay, near as well as rear. Done. So these are the two indices. Again, I'm saying, please be very careful. One question has been asked by UPSC. Let me show it to you. Because many of you are asking, sir, has a question ever been asked on this concept in the UPSC? My answer is yes. Please have a look at this and tell me. Okay, please have a look at the question. Last year, this was asked very much last year. Let me not start the poll because we are discussing the same concept automatically. Let's solve it here itself so that you'll understand, okay, these are the kind of questions have been asked by UPSC. With reference to Indian economy, consider the following statements. An increase in the nominal effective exchange rate indicates appreciation of rupee. Please tell me, correct or wrong? Let me know. Is it correct or wrong? Did we not see the same statement earlier? Whenever near index increases, rupee is getting appreciated. Statement 1 is correct. An increase in the real effective exchange rate, REER, indicates that there is improvement in the trade competitiveness. Second statement, correct? No. If REER increases, trade competitiveness will go down. Second one is wrong. An increase in the trend in the domestic inflation relative to inflation in other countries is likely to cause an increasing divergence between near and rear. Very typical statement, difficult statement. Why? None of the books will cover this. But please look at it and tell me, what is the difference between near and rear? First and foremost, what is a very important component that is different between near and rear? In rear, we will consider inflation, price levels in different countries. And in near, there is no inflation. And the statement says, inflation keeps on increasing. If inflation keeps on increasing, don't you think the gap between divergence means gap? I hope you understand. Divergence simply means gap. If the inflation keeps on increasing, don't you think the gap between both the near and rear will also keep on increasing? Yes or no? Please tell me. If inflation keeps on increasing, don't you think, again, look at the formula. You don't need to buy out formula. But you know, in rear, inflation is considered. In near, there is no inflation. And if there is a higher inflation in one country, don't you think the gap between both near and rear will start increasing? Statement is correct. So third one is also correct. Right? Many of you are asking, sir, these are very, very difficult concepts. So what is being asked in UPSC? These are the things that UPSC will test you. And if UPSC wants to make it difficult, like this year's prelims, they will not use these options. They'll simply say only one is correct, 2 are correct, 3 are correct. Right? None of them are correct. Yes or no? Right? Only one is correct, 2 are correct, 3 are correct, and none of them are correct. Difficulty level automatically will go up. In fact, this was asked last year's UPSC. You can use elimination method. You can simply use elimination method, get the answer. But if UPSC wants to toughen the question a bit more, automatically this is the level, or this is how they will try to make it. Done. So this is basically the concept of near rear indexes, right? Both are published, right? Both are published by UPSC. I'm sorry, both are published by RBI. Right? Because I was looking at a question UPSC, I suddenly said UPSC. So this is basically the question. Okay. So right option, sir. What is the right option for this UPSC question? My dear, 1 is correct, 3 is correct. Obviously, the right option will be option C. Done? Okay. So any difficulty now? Those who are saying all these concepts are difficult, it feels difficult because you're not revising. I hope you understand. It feels these are very, very difficult because you are not revising. Please revise. Automatically all these concepts once or twice when you revise, automatically these will become easier. Done? Okay. Let me go to the next one here. Foreign trade policy 2023. Foreign trade policy 2023. But before that, any question? Any of you have any kind of a question? Sir, if rupee value decreases, called rupee depreciation? Yes. Understand this. rupee versus a dollar. It's always a comparison between, right, two currencies. If rupee value against the dollar goes down because of the market forces, that is called as rupee depreciation. Okay. What is multi-bagger today? Observe. Okay, not required. Multi-bagger, I believe you are talking about share market. Not required. Don't worry. Okay. What is the difference between NIR and REER? My dear, NIR will provide information about currency competitiveness. Is it okay? NIR will give you information about currency competitiveness, whereas a REER will provide information regarding trade competitiveness. I hope you understand the difference here. NIR will give you currency competitiveness, whereas a REER will provide, right, trade competitiveness. If NIR will change, you will be able to find out whether rupee is appreciating, rupee is depreciating. And when right, the REER will change, you will find out whether India's exports trade competitiveness will increase or decrease. Done? Okay, so that is a basic idea. How REER will cause imports cheaper, my dear. Real exchange rate. We have discussed real exchange rate, right? This is a problem with some of you. You are not revising. Tell me real exchange rate. Did we not discuss this? What is the difference between real exchange rate and real effective exchange rate? Please tell me. What is the difference between real exchange rate and real effective exchange rate? In real exchange rate, we are comparing rupee versus dollar. That is, we are taking only one currency. Whereas here, we are taking rupee on one side and basket on the other side. Now, what is true in case of real exchange rate? Don't you think that should be true in case of real effective exchange rate? Please tell me. What is true in case of real exchange rate? Don't you think automatically it becomes applicable for real effective exchange rate or not? Yesterday we've discussed all of it. Right, so in case of let's say one bottle in USA becomes 3 bottles in India, automatically that is real exchange rate. And if this increases one bottle to, let's say, 5 bottles, right, from USA's perspective, we'll simply say real exchange rate has increased, which means exports from USA to India will go down. India's exports to USA will increase. That is basically the idea. Okay, any difficulty? Any difficulty? Sir, when 1 rupee changes to $0.8 to $1 means a rupee is appreciated because more goods can be purchased $1. Yes. What did I say? What did I say? Please tell me. One you told RER versus compare commodities, then how are we talking? My dear, there is no point in discussing same point again and again. Please revise. Yesterday's class I have discussed. Okay, so what I told, let me tell you, right? Let me repeat it again. Tell me whether I have told the same thing or not. Let's say 1 rupee is equal to $0.8. Now 1 rupee will become is equal to $1. What did I say? Did I say rupee is appreciating or depreciating? You tell me, has rupee appreciated or depreciated if I move from here to here? Has a rupee value increased or decreased? Rupee value, has it increased or decreased? Sir, you said depreciated. If I've said, did I say depreciated? I am asking now, did I say depreciated? Okay, my mistake then. It is not depreciating, it is appreciating. I thought I was discussing something else. My mistake. Right? Rupee is appreciating. I'll repeat it again. If I've said otherwise, please have a look at this. If 1 rupee is equal to $0.8 and it becomes 1 rupee is equal to $1, rupee value has increased. Again, concept is simple. You are paying more dollars to purchase the same 1 rupee. Is it okay? I'll repeat it again. You are paying more dollars to purchase same currency, which means dollar value has gone down. Dollar value has gone down and rupee value has gone up. Any difficulty at least now? Let me know. Any difficulty at least now? In this example, dollar value has gone down, rupee value has increased. Can I go forward? How? My dear, Forget about dollar. Forget about dollar and rupee also. This bottle, right now you are paying 50 rupees to purchase this bottle. And after 1 month, you'll pay 70 rupees to purchase the same bottle. Please tell me what has happened to the value of the bottle? What has happened to the value of the bottle? Right, value of the bottle has increased and the rupee value has gone down. Apply the same logic here. Apply same logic. Instead of bottle, put rupees. Simple. Instead of bottle, put rupees. To purchase the same rupee, right now you are paying $0.8, and after 1 month, to purchase the same rupee, you are paying $1. Can I say value of rupee has increased? Even if this is difficult, read it vice versa. Read it opposite. You are paying 1 rupee, you are getting $0.8. And now you are paying 1 rupee, you will get $1. At least now it should be clear. The value of rupee has increased and value of dollar has gone down. Right? That is exactly what I was talking earlier. Right? If I've told vice versa, this is a correct one. Please correct it. Value of rupee has increased, value of dollar has gone down. Okay? Done. Okay, so that is a basic discussion regarding the concept of rear and near. And again, please understand, don't get into the calculations. You're simply wasting your time. UPSC will not ask you calculations, simply go forward. Next concept I want to discuss is the idea of a foreign trade policy, idea of FTP. Now earlier we had a foreign trade policy which was announced in 2015 and was supposed to end in 2020. Simple, understand this. Government once every 5 years will announce a foreign trade policy. Right now, a new foreign trade policy has been announced. Earlier, government announced a FTP which was applicable from 2015 to 2020. And because of the pandemic, what government did was, in 2020, rather than announcing a new foreign trade policy, they stated that we'll continue with the same foreign trade policy. And very recently, Government of India has announced a new foreign trade policy which will start from 2023. I repeat, which will start from 2023. And if you please look at the slide, if you see that, you will realize that unlike earlier situation wherein foreign trade policy was applicable for 5 years, right, now there is no time period for the foreign trade policy. There is no end date for the foreign trade policy, which means what? Understand the point carefully. I've used a term here. The current foreign trade policy is open-ended. The current foreign trade policy is open-ended. Open-ended means what? There is no due date. There is no end date for the FTP. The government will keep on implementing the same policy as long as they will withdraw the policy. Any difficulty with this? And I've used one more term, sunset date. Did we use the term sunset date earlier? Let me know. Right? How many of you remember? In the context of GST. In the context of GST. Right? We have used it, which means there is no expiry date for the policy. Same policy will keep on getting implemented over a period of time until and unless government will withdraw this policy. The foreign trade policy which is announced now will be boosting India's exports to $2 trillion by 2030. Okay, it will be promoting the total value of exports from India by 2030. Our target is to achieve 2 trillion. And if you check the newspapers here and there, you will get the data. The value of total exports from India is somewhere around 700 to 800 billion dollars. It has reached the highest level, 700 to 800 billion dollars. Out of that, majority are the goods exports, that is merchandise exports. Remaining part are the service exports. More than $420 billion worth of merchandise exports were done in the last 1 year, and remaining around $300 billion worth of service exports have been done from India. So we want to promote the total amount of exports to $2 trillion by 2030. And under this, there is absolutely no due date, no sunset date, expiry date is not there. Now, what are we implementing under this? Right, look at the first point here. there is a concept called as incentives to remission. I'll discuss this, have patience. Then we'll also promote ease of doing business. We'll also promote ease of doing business. We will implement a lot of export promotion initiatives. For example, let me check how many of you are reading newspapers. Can I say that production linked incentive is related to export promotion from India? Again, let me see how many of you are reading newspapers. PLI, production linked incentive. Is it not a scheme to promote exports from India? Answer is yes, by the way. Okay, so export promotion incentives will promote a manufacturing sector, will promote even the e-commerce exports, will basically set up export from the districts. So that is, will develop certain districts as export hubs. We'll discuss this also, have patience. And will also streamline SCOMET policy. SCOMET basically is one of the initiatives of United Nations, Special Chemicals, Organisms, Materials, Equipment and Technology. Equipment and Technology. This is basically the long form of SCOMET. SCOMET is one of the initiatives, again, not related to economics, but anyway, since it is there, I'm just giving you a point here. SCOMET is an initiative of United Nations, Special Chemicals, Organisms, Materials, Equipment and Technology. So we'll be streamlining the provisions under the SCOMET policy. Simply by heart this. Don't do PhD on this. Simply by heart this. Right? So these are some of the very important points under the foreign trade policy. Now, there is one point here, incentives to remission. And second point, I'll merge and have a discussion regarding this, export promotion initiatives. Now, what is this idea of an incentive to remission and export promotion initiative? Have a look at this. Let me explain this. Under the earlier foreign trade policy, I repeat, earlier foreign trade policy. Under the earlier foreign trade policy, there was one scheme implemented by the government by the name of Merchandise Exports from India scheme. Merchandise Exports from India scheme. Okay, MEIS. This is the long form. Now, under the Merchandise Exports from India scheme, what would happen is very simple. Let me explain this. Imagine you're manufacturing this bottle. Government of India, first and foremost, imagine you're the Prime Minister. Would you want to promote more and more exports of this bottle to international market? Answer to my question. Would you want to promote more and more exports of this bottle to the international market? Answer is yes. One way that you can promote exports, one way is that if I export more, you will give me more incentives. I'll repeat the statement. If I export more, you will give me more incentive. Incentive means money, simple, right? Reward. If I export more, you will give me more incentive. Now, in order to earn more and more incentive, I will manufacture more and export more. That was basically the objective behind Merchandise Exports from India scheme. Now, what kind of incentive was provided? Right, let me take the piece of paper here. Don't worry about what is written. Focus here. Focus on the discussion. Imagine you're the Prime Minister. I am manufacturing and exporting. I'm manufacturing and exporting this bottle to the international market. For every bottle that I export, you will give me 5 rupee worth of piece of paper. Right? One student says, sir, what you explained, please simplify that. How can I make it much more simple? My dear, if you're the government, would you not want me to export more from India? Yes or no? We are discussing the idea of exports since yesterday also. You want me to export more? Answer is yes. Right? And one student says no. I don't want to take the name, but the same student who is writing no, please tell me the answer why. Why you do not want to export more from India? If you tell me why, I will answer to you. Otherwise, I'll simply go forward. So if you're the government, you want me to export more to the international market. But how? How will you promote exports? You will tell me, sir, you export, let's say 100 rupee worth of a bottle, or let's say, right, $100 worth of a bottle. I will give you certain reward. And this is a reward. I'll call this as scrip. Scrip is nothing but a certificate. This is called as a scrip or certificate. Now, what is the next point here? Imagine this value of this piece of paper. The value of the scrip that I'm holding is, let's say, 5 rupees. Let's say, take it simple, 5 rupee. Now, first question to all of you. If I want to earn this incentive, will I promote more and more exports? Will I do more and more exports to the international market? Arey Baba, if I'm a manufacturer, some of you are saying, no, I do not understand what is your argument. I want to earn more reward. Will I export more or not? Of course, yes. Right. Question number 2. If you give me an incentive of 5 rupee, don't you think automatically my product's price, automatically it will go down? Export competitiveness will increase. Yes or no? Right. And third question, can I call such a scrip or certificate as export linked subsidy? Can I call this scrip or a certificate as export linked subsidy? Let me know. That is, whatever is the value of my export, based on the value, I will get the subsidy. Is it not export linked subsidy? Answer is yes. This is basically the concept of merchandise exports from India scheme. So Government of India, right, Government of India, in order to promote more and more exports, one of the schemes that they implemented was MEIS. But there is one problem here. There is one problem. What is the problem? India is a member of World Trade Organization, and under World Trade Organization, there is one agreement on subsidies and countervailing measures. Agreement on subsidies and countervailing measures. Do not worry about the long form. Please have a look at it. I've written it. Don't worry, I've written it. There is one agreement under the WTO, that is agreement on subsidies and countervailing measures. Now, what does this agreement on subsidies and countervailing measures says? The long form is here. This agreement on subsidies and countervailing measures says, if a country's per capita income has crossed more than $1,000, I repeat, if a country's per capita income has crossed more than $1,000, then such country should not be providing any export linked subsidy. Any difficulty with the statement 1? I'll repeat it. If a country's per capita income has crossed more than $1,000, such country should not provide any export linked subsidy. And there is an argument in favor of it. What is the argument? Let's say here is one country, country 1 and country 2. And just to make it very amply clear to you, imagine this is USA and this is any one country within African nation or African continent. Before you start correcting me, African continent. Now please tell me, will USA be in a position to provide more export linked subsidy? Let me know. Will government of USA, will it be in a position to provide more and more export linked subsidy? My dear, you're comparing between US and African country. You're comparing between African country and USA. Don't you think USA, that is government of USA, has more money? If they want to promote more and more exports, they can keep on providing more incentives to their manufacturers. And as a result of this bottle will become cheaper and they'll keep on exporting to, let's say, any African country. What will happen to the African country? Do not complicate it. I hope you understand. Do not complicate. Sir, countervailing duty. Sir, that, this. Do not complicate it. Understand in a simple way. You're talking about some measures. I'm not talking about measures. Simply focus on the discussion and tell me. Right? If government of USA provides more and more subsidies to the manufacturers to promote exports, What will happen to the exports from USA to, let's say, Ghana or Nigeria? Don't you think exports will keep on increasing? What will happen to the economy of the second country? Don't you think economy of the second country will go down? Manufacturing will be destroyed, etc., etc. So can we allow this to happen? Can we allow this to happen? Of course, no. So look at the agreement. That's the reason. Look at the agreement now. As per the agreement, a country that has a per capita income of more than $1,000 is not allowed to provide export linked subsidies. And in the context of India, post 2013 and 2014, repeat, post 2013 and 2014, India's per capita income is more than $1,000. Will other countries allow you to provide export linked subsidies now? After all of this, you please tell me, will other countries allow you to provide export linked subsidies? Answer is no. And if you remember MEIS, is it an export linked subsidy? Right, connected to FTP, earlier FTP. If you remember, MEIS, Merchandise Exports from India scheme, is it, right, an export linked subsidy or not? Of course, the answer is yes. It is an export linked subsidy. That's the reason our trading partners went to WTO. We'll discuss how WTO works today. Have patience. And Government of India was forced to withdraw Merchandise Exports from India scheme. Please look at the first point here and tell me, does it make sense now? What is remission? I'll tell you. Have patience. Does it make sense when they will say incentives will shift from incentives to remission system? What is remission? I have not explained, but tell me, does it make sense or not? We should shift from the incentive system to remission system. Okay. Now, in that case, what we have done? MEIS is an export incentive scheme. It is to boost exports. But under the WTO policy now, because our per capita income is more than $1,000, can we provide export linked subsidy? Answer is no. Now, how can we promote exports? By providing certain rewards or incentives. And that is where Government of India has implemented one more very important scheme, RODTEP. That is where Government of India has implemented one more scheme by the name of RODTEP. RODTEP, I'll give you the long form. Don't worry, all of this is there in the slides only. Nothing new, everything is there in the slides. I'm using the same slides. All of you will get the same slides. What is this RODTEP? Please have a look at this. RODTEP simply stands for remission of duties or taxes on export product. RODTEP simply stands for remission of duties or taxes on export product. Now, what is this idea of remission of duties or taxes on export product? Follow this very carefully, slightly technical, but understand it once, that should be sufficient. Let's start. Imagine you are manufacturing this bottle. Let me start. Imagine you are manufacturing this bottle. So when you are manufacturing this bottle, you are here, manufacturer, you will purchase raw materials. Point number one. Is it clear? Anybody who has a doubt, sir, why will I purchase raw material? Okay. So you will purchase raw materials. Point number two. When you purchase raw materials, please tell me, will you pay goods and services tax on that? Let me know. Will you pay goods and services tax on it? Answer is yes. Now, imagine you have purchased raw material. You have paid certain goods and services tax. You want to export the product to the international market. You want to export the product. Point number three. Whatever goods and services tax you have paid, will you receive in the form of input tax credit? This is point number three. Whatever GST that you have paid, will you get input tax credit on it? Answer is simply yes. Now, please tell me, if you have paid a 10 rupee in the form of GST and you get input tax credit of 10 rupee, whatever is the price of the bottle, will you include the taxes in this? Whatever is the price of the bottle that you have decided, right? Let's say you have decided to export it at 100 rupee. Will you include taxes, that is GST here? Answer is yes. Some of you are saying yes. Sorry, answer is no. Some of you are saying yes. My dear, no, you should not include. Those who have not attended GST, right, you might find this a new concept, but please attend the revision classes. Please have a look at the videos earlier. You have paid a GST of 10. Simple idea. You have paid a GST of 10. Government will give the 10 rupee back to you. Will you include that 10 rupee when you decide the market price of the bottle? Answer is no. Right? Answer is simply no. Which means in the whole supply chain, I repeat, in the whole supply chain, there is no tax that is getting added in the final price. When you talk about the final price in the whole supply chain, whatever taxes you have paid, you are getting it back. On the final price, there is no tax component that is involved. This is called as zero rating of exports. This is referred to as zero rating of exports. Any difficulty here? This is referred to as zero rating of exports. What is basically the idea of a zero rating of exports? Whatever taxes you have paid, you are getting it back. Which means 100 rupee price that you have decided for this bottle does not include any taxes. Does not include any amount of tax. Right? That is called as a zero rating of exports. Now, next question to all of you. If we can achieve zero rating of exports, can we improve our trade competitiveness? That is basically, can we improve export competitiveness? Answer is yes. And there is a reason why I'm talking about this. Why? Please follow the next point here. Imagine one of the components that you purchased was petrol. Let me complicate it. Imagine one of the components that you purchased to manufacture this bottle was petrol. Now, please tell me, do we have GST on petrol? Let me know. Do we have GST on petrol? Answer is no. Question number 2. If there is no GST on petrol, imagine you paid a tax of 10 rupee for purchasing petrol. Will you get the input tax credit of 10 rupee here? 10 rupee GST, you will get it. Will you get even this 10 rupee in the form of input tax credit? Some of you are saying yes. No, you are wrong. You have not revised GST. If GST is not applicable on petrol, how will you get input tax credit, my dear? This second 10 rupee, you will not get it in the form of input tax credit. This 10 rupee, you will get it because it is under GST. This is not under GST. So you will simply not get this 10 rupee as input tax credit. Question number 3. If you do not get the input tax credit of 10 rupee, will you include this in the final market price or not? Let me know. Will you include this? Now, the market price of the product automatically will become how much? 110 rupees. Agreed? Market price will increase from 100 to 110. Can we say this export is zero rated? If the market price of this product is 110, can I say the product is zero rated export? No. There is some component of taxation. Or some of you are saying yes. I don't know what you're listening to. I absolutely have no idea what you're listening to. Earlier it was 100. You paid only 10 rupee GST. You got the 10 rupee back. So when you decided 100 rupee, absolutely none of the 100 rupee is because of taxation. Which means 0 rupee tax on export. But on the other hand, if you purchase petrol, if you purchase electricity, if you purchase a diesel, do we have GST on them? Absolutely no. We do not have GST, which means whatever taxes you have paid on these commodities, automatically you will include in fixing the market price of the product. Now imagine you have paid a 10 rupee GST, you will get it back. 10 rupee for petrol, that is tax. You will not receive the credit for that. So you will increase the market price of this product from 100 to 110. Now, can I call this product as zero rated? Answer is no. This is not zero rated because out of 110, 10 rupee is the tax. Can I go forward? Can I go forward now? Now, please understand the next point. If I can reduce the tax impact, basically ensure that whatever taxes you have paid and you have not received the credit of it, if I ensure that you will get the credit of it, can I ensure that exports will be zero rated? Is it okay? Whatever taxes you have paid, GST, I will give it back to you. You have purchased petrol, you have paid tax, I will return it to you. You have purchased electricity, you have paid tax on it, I will return it to you. So whatever taxes you have paid in the whole supply chain, if I give it back to you, can I move towards a zero rating of exports? And basically answer is yes. We will move towards a zero rating of exports. And that is what we are trying to do under the concept of remission of duties. Please have a look at the statement here. Remission of duties or taxes on export product. And under this, what we do is, there are certain taxes which are paid at the local level, at the state level, or at the national level, which are not covered under GST. Simple idea. There are certain taxes that you have paid at the local level, state level, or national level, which are not covered under GST, which means you will simply increase the market price by adding these taxes. And these taxes are referred to as embedded taxes. Right? These are referred to as embedded tax. Now, can I simply say, if a tax of 20 rupees paid on diesel, if a tax of 20 rupees paid by you on a diesel, can I call this 20 rupees embedded tax? Let me know. If you pay 30 rupees for electricity in the form of a tax, can I call this 30 rupees an embedded tax? The 10 rupee tax that you have paid for petrol, it is nothing but embedded tax. So whatever are the embedded taxes at the state level, local level, or the national level, those embedded taxes will be returned to the manufacturer, will be remitted back. Remitted back simply means returned back to the manufacturer. Now imagine you have paid 10 rupee tax on petrol, 30 rupee for electricity, and 20 rupee for diesel. So total taxes you have paid here will be 60, and GST of 10 rupee. Total taxes you have paid will be 70. But out of 70, already 10 rupees ITC. So remaining 60 rupees embedded tax, I will return even the 60 rupee embedded tax to you. Right? Then don't you think I can achieve zero rated exports? Is it okay? I can achieve zero rated exports. And if I can achieve zero rated exports, what will happen to trade competitiveness? What will happen to export competitiveness? Automatically, export competitiveness will start increasing. This is how this is how Government of India is ensuring that embedded taxes will be returned. And please understand the next point. These embedded taxes are not incentives. I hope you understand. These embedded taxes are not incentives. Right? Any difficulty here? You have paid a tax, I'm returning it to you. Is it an incentive? Let me know. You have paid a tax, I will return the tax to you. Right? Is it incentive? Of course, no. If it is not an incentive, are we violating agreement on subsidies and countervailing measures? Let me know. Right? If this is not an incentive, it is not a subsidy, are we violating agreement on subsidies and countervailing measures? No, because this is not incentive. Certain taxes are there, right, which are embedded in the system. I will give it back to you, just like I'm doing in the form of GST. That is basically the concept of the remission of duties and taxes on export product. And don't you think what we have done here is, earlier we had MEIS scheme, now we are using RODTEP. Earlier we had MEIS scheme, now we are using RODTEP scheme to promote export. Can I call this as movement from incentives to remission? Let me know. Can I call this as a movement from incentives to remission? Yes or no? That was the first point within the FTP. That was very much the first point within the foreign trade policy. Incentives to remission system. Because earlier we provided incentives, but there is a problem. The incentives that were provided by the government violated one of the agreements that Government of India signed under WTO. And that is the precise reason today we do not have MEIS. Right? We are not having MEIS. We are simply having RODTP, remission of duties and taxes on export product. And some of you are saying, sir, are we simply renaming the scheme? Absolutely no, my dear. Some of you are saying, are we renaming the scheme here? No, we are not renaming. Right? Basically, what we have done is we have changed the whole system of how, right, the calculation will be done, how export competitiveness will be increased, etc., etc. The system is changing, not just name. Please understand that. Okay, can I go forward now? Any difficulty with this? RODTP, any difficulty with this? Please do let me know. Many more schemes are there, we'll discuss it, don't worry. Right, so other points within RODTP, it will cover taxes at the central, state as well as the local level. The remission is in the form of duty credit scrip. Right, have a look at this. The remission that will be given will be in the form of duty credit scrip. Now, what do you mean by duty credit scrip? Do you remember your friend here? Certificate. Right, imagine the government needs to provide you the remission of 10 rupee. Under this scheme, let's say government needs to provide you the remission of 10 rupee. So what government will do is, they will give you a piece of paper, certificate. Again, although I'm giving you a piece of paper here, in reality, they will not issue this. It's always in a digital form. It is in digital form. Okay, so imagine this value of this scrip is 10 rupee. Now, what is the use of this 10 rupee? Understand this also. What is the use of this 10 rupee worth of scrip or certificate? Point number one, you are importing something. Let's say you're importing, right, a product from international market. When you're importing, you will have to pay taxes. Yes or no? When you're importing something into India, you will have to pay a certain amount of taxes. Let's say you are supposed to pay 20 rupee tax to the government, and taxes on import is called as a customs. Simple idea. Whenever I'm talking about taxes on imports or exports, these are called as customs, or else these are also referred to as tariffs. So have a look at this. You have a certificate whose value is a 10 rupee. You are importing one more product. You'll have to pay taxes of 20 rupee. Then government says, what you can do is, you can go to the government, use this piece of paper, that is certificate or a scrip, right, pay 10 rupees in the form of a scrip, plus you pay 10 rupee tax. Total will be how much? 20 rupee. Is the logic okay here? In simple terms, what I'm trying to say is, whatever scrips you will get, that is the remitted taxes, these scripts, you can use it to pay taxes to the government. That is the first use. Second one is, some of you will now say, sir, what if I'm not importing anything? What if I'm not importing anything? Then government says, don't worry, you can sell it to somebody else. You can transfer it to somebody else. For example, you have a friend. You are not importing anything, but your friend is importing a product. You can simply transfer the scrip to your friend. They can use it for payment of the import duties or tariffs on imports. That is basically, right, the idea of remission of duties or taxes on export products. Credits can be used to pay basic customs duty on imported goods or transferred to other importers. And there was a committee which was set up by the government to give recommendation regarding RODTEP, and this committee is called as GK Pillai Committee. GK Pillai Committee. Okay, so these are certain important points regarding RODTEP. Please remember this. Right? Please remember this. Other schemes are there. Right? For example, sir, are there any other schemes to promote exports from India? Let me have a look at this. One more scheme name, PLI, Production Linked Incentive. Because I'm discussing FTP, there are many schemes. These are the different schemes. One more scheme is PLI, and long form of PLI is Production Linked Incentive Scheme. Now, under the Production Linked Incentive Scheme, under PLI, Government of India says the companies will be allowed to invest in the Indian market. There are a lot of sectors, around 13 to 14 sectors have been identified. The companies will be allowed to invest in these sectors, and if they achieve certain targets, when they meet certain targets, government will provide incentives to these companies. Any difficulty in understanding this? It's a very simple flow here. Understand this. Government of India has identified 14 sectors. For example, right, battery manufacturing, solar panel manufacturing, right, food processing. 14 sectors are there under PLI. And companies, whether it is a foreign company or a domestic company, they will have to make investment in these sectors, and certain targets will be given to these companies. If they can meet the targets, sir, for example, what can be the target? It will vary from one sector to another sector. There are 14 sectors. Do not buy heart it. Target could be sales that they're supposed to achieve. Target could be the total amount of investment they're supposed to do, etc., etc., etc. So targets will be provided. If you achieve the targets, if you basically achieve the targets, then the government will provide incentives to you. And this will be cash incentive. Cash incentive means what? Please understand the difference here. Imagine I'm issuing a scrip here. The value of scrip is a 10 rupee. But on the other hand, under PLI, I will not issue scrip. I will directly give the 10 rupee transferred into your account. Don't you think as a manufacturer, you'll prefer the second one compared to the first one? Please do let me know. As a manufacturer, will you not prefer the second one, that is 10 rupee incentive transferred into your bank account, rather than issuing a scrip like this? That is the point here. Under the production linked incentive, government is promoting, right, certain investments in sectors. If the manufacturers, participants will participate and achieve the target, the incentives will be directly given to the manufacturers. Right? No scripts here, directly cash incentives are provided. Sir, why is the government of India doing all of this? Objectives are very, very simple. Objectives are very simple. One, it will create a lot of employment. It will create a lot of employment. Yes or no? Please let me know. It will lead to capital formation in India. Investment will lead to capital formation. Third, it will reduce import dependence. It will reduce import dependence. And if more and more manufacturing will happen, we'll also be able to promote more and more exports. Right? So these are some of the objectives. And with this, right, can we also extrapolate and say manufacturing will be promoted? Manufacturing will be promoted. Contribution to the GDP will increase, right, etc., etc. So these are some of the objectives with which Government of India is actually promoting a scheme by the name of Production Linked Incentive. And there are two students who are asking, sir, is it not violating WTO policy? My dear, in this case, am I giving incentives connected to exports? Please tell me. In this explanation that I've done so far under PLI, am I connecting the incentives to exports? No, I'm connecting incentives to, let's say, investment criteria. I'm connecting the incentives to the sales criteria, that is total volume of sales done by the companies, etc. That is the precise reason. This is, as of now, this is not violating the WTO policies. Right? So under the scheme, cash incentives are provided based on certain parameters such as incremental sales. Right? Again, don't get confused here. Incremental simply means higher sales. Compared to last year, how much have you done? Extra sales that you have done. So incremental sales that is done, investment that is done. Incentives will vary from one sector to another sector. PLI was launched covering only 3 industries. Now 14 industries. 14 industries are under PLI, Production Linked Incentive Scheme. Can I go to the next initiative of Government of India? Any problem? I will discuss two important initiatives, two schemes to promote exports. Let me go to the third one. There is one more, right, initiative of government, the idea of Interest Equalization Scheme, IES, Interest Equalization Scheme. Now, what is this Interest Equalization Scheme? Let me explain this. Imagine two countries. In fact, imagine, let's say, India and China. You are a manufacturer of this bottle, and to manufacture this bottle, you will take loan from a bank. Simple. You are a manufacturer, let's say M1, who is present in India. You will take a loan from a bank. And imagine there is one more manufacturer who is sitting in China. M2 is sitting in China, right? This manufacturer also wants to manufacture a similar bottle. M2 will take a loan from a bank. Of course, Chinese bank. Okay. M2 will also take loan from a bank. Now, follow the next point carefully. Imagine everything else is same. Imagine everything else is same. Cost of technology, labor, raw material, everything else is same. Now, please tell me, if you will take a loan and you will pay, let's say, 8% rate of interest, and your competitor in China will take a loan and pay, let's say, 3% rate of interest, whose product will be more competitive in the international market? Does it make sense to you? Right? I'm taking a very simple example. Whose products will be more competitive? Of course, your competitor. Which means you as a manufacturer in India, you are at a disadvantage. Any difficulty in understanding this? You are at a disadvantage compared to your competitor. And to address this itself, that is, Indian manufacturers are having a lot of disadvantage compared to international manufacturers. In order to address this, Government of India has introduced a scheme by the name of Interest Equalization Scheme. And what will happen? What will happen in the Interest Equalization Scheme? Let me start with the same idea. M1 will take a loan from a bank. Now, let's say hypothetically, the Government of India will provide 5% rate of interest out of 8%. Think of it. Imagine Government of India will provide 5% rate of interest out of 8%. Then in that case, can I simply say that effectively you are paying 3% rate of interest? Yes or no? Right, I'll repeat it again. The bank is charging a rate of interest of 8%. But what if Government of India will provide 5% rate of interest out of this? Effectively, you will pay 3% rate of interest. And if, right, you are paying 3% rate of interest, what will happen to export competitiveness? What will happen to export competitiveness? Automatically, export competitiveness will start increasing. This is basically Interest Equalization Scheme. This is basically the concept of Interest Equalization Scheme. Again, some of you are asking, sir, will the government pay the loan? Did I say government is paying the loan, or did I say government is paying interest? And have a look at the name also. Interest Equalization Scheme. There itself it is self-explanatory. That is, government is not paying the principal, rather government is bearing the burden of interest. So basically what government does is bear the burden of some part of the interest so that export competitiveness will increase. This is the idea of Interest Equalization Scheme, IES. It was introduced as a part of Foreign Trade Policy 2015 and 2020. It was applicable for a period of only 5 years, but now it has been extended till financial year 24. Till the end of financial year 24, this has been extended. Exporters will receive interest subsidy. It is available for all the MSMEs, exporters, other exporters who will manufacture 416 products. Let me explain this. Let me ask a very simple question. How many of you believe that this interest subsidy or interest support should be given to all the manufacturers in India? Let me know. How many of you are under the belief that this kind of interest support should be given to all the manufacturers? Of course, no. So what has the government of India done? Government of India has identified certain manufacturers who are manufacturing a list of products. There is a list of the products. If you are manufacturing this list of the product, you will get interest subsidy. And in addition to this, right, the MSME sector, micro, small and medium enterprises sector will also get this benefit. Right, under this, the banks give the loans to the exporters at lower interest rate and are paid that interest subvention. It is paid by the government to the bank. This is basically the concept of interest equalization scheme. Can I go forward? Many of you are saying, sir, why is the government doing this? My dear, don't you think that is a duty of the government? Think of it. Right? Don't you think it is the duty of the government to promote exports from India? Yes or no? Right? Many of you are asking a question, why is the government taking a financial burden? It is the duty of the government. Just like it is the duty of the government to provide subsidy for the farmers. It is the duty of the government to provide subsidy to houses. It is the duty of the government to provide help or incentives even to companies. Right? So that is basically the idea of interest equalization scheme. Can I go forward? Any difficulties here? Can I go forward? Answer. Can we go forward? Any issues so far? Right. So this is a discussion regarding foreign trade policy. Yes, nobody is answering. Am I audible or not? Am I audible? Arey Baba. Okay. Shall I go forward now? Right. There was no reply. Suddenly the whole system got stuck up. Okay, done. So this is a discussion regarding foreign trade policy, right? A certain initiatives of government of India to promote more and more exports. There are some more the initiatives, export initiatives, many more are there. We'll discuss it. Under agriculture sector, I'll also discuss couple of more initiatives of government of India. Don't worry. Okay, now next concept that I want to discuss with you people is the idea of World Trade Organization. WTO, World Trade Organization. Important for UPSC exams. Generally, this is there in the current affairs. If you're reading newspapers, you will know that every week there is one or the other article regarding WTO. And in UPSC, questions have been asked. Don't worry, I'll show it to you later. Now let's start. Whenever you talk about WTO, World Trade Organization, please understand certain points here. The WTO was established, I'll come back to this. WTO was established from 1995. WTO was established from 1995. That is 1st of January 1995. WTO is basically a group of countries. Simple. WTO is a group of countries. That is, in case of WTO, there are around 160 plus countries who have come together. They have set up or established one organization. And understand the history of this organization. During the Second World War, there was a huge destruction to the international trade. Do you remember this? High school. 1939, Second World War broke out. Yes or no? Right, 1939, Second World War broke out. And what was the outcome of Second World War? The international trade was disrupted. The exchange rate was also disrupted. Many countries were facing issues regarding investment in infrastructure, etc., etc., etc. Now, as a result of this, right, the disruption that was caused because of the World War, there was one discussion that was happening in 1944 and 45, and that was basically Bretton Woods Conference. There is one conference referred to as Bretton Woods Conference. And many of you will start typing now, sir, what is the meaning of the term Bretton Woods here? Bretton Woods basically is the name of a city. Simple. Bretton Woods, it is the name of a city. So there was a conference that was conducted in a Bretton Woods, and that is basically Bretton Woods Conference. And have a look at this. As a result of this conference, there was a decision to establish three important organizations. One organization was World Bank. Please tell me, do we have World Bank today? One organization was World Bank. Do we have World Bank operating today? Of course, answer is yes. And if you have been reading the newspaper, Mr. Banga, right, the person connected to India has become the chairman now. So World Bank, is it operating? Yes. And what is the role of the World Bank? World Bank mainly will provide loans for development. World Bank mainly will provide loans for development. We proposed one more organization, IMF, International Monetary Fund. And please tell me, right, is IMF working today? Answer is yes. But most importantly, I've told the answer already. IMF is involved regarding BOP crisis. It is always there in the newspaper to take care of crisis, currency crisis, which the countries will face. So we faced, right, issues regarding investment for development. We set up one organization. We faced issues regarding exchange rate. Countries are facing crisis regarding dollars, etc. We set up one more organization. And third one that was proposed was International Trade Organization. Third one that was proposed was International Trade Organization, ITO. Please understand. International Trade Organization, ITO, was proposed. And please look at the name and tell me, is it okay if I say ITO will be to promote international trade? Is it okay? ITO will be to promote international trade. The name itself is a self-indicator. But what happened was, the three were proposed, third one was not established. I'll repeat the statement. Three were proposed, the third one was not established. ITO was not established. Right? There were different reasons for this. Most important reason was member countries could not come to a conclusion. Right? There was no consensus on what should be the structure of ITO. Many countries opposed what was being discussed. And that is the precise reason ITO was never established. And only two institutions were established in the Bretton Woods Conference. And that's a precise reason. Please remember this. These two are also referred to as Bretton Woods twins. Is the logic okay with all of you? These two are also referred to as, that is the World Bank as well as the IMF, are referred to as Bretton Woods twins. Do not be confused. Understand the evolution, automatically understand why these are called as twins. If even ITO was established, it would be called as a triplet. But ITO was not established. Only two, hence called as a Bretton Woods twins. So what happened was, ITO, there was no consensus, no establishment of ITO. But again, member countries realized, that is, these countries realized that we need to have something in order to promote trade in the international market. And that is when they came together and introduced a new system called as GATT. It was basically an arrangement. GATT is not an organization. I hope you understand. GATT is an agreement. That's it. Today, if you say WTO, WTO is an organization. There is an office of WTO. There are, right, member countries present within WTO. So what we did was, as a stopgap arrangement, as a temporary arrangement, we signed an agreement, and that is called as a GATT. GATT, I'll give you the long form, have patience. Right? How many countries were there in the GATT? When we established this, there were 23 countries, including India, by the way. Including India, there were 23 countries. And over a period of time, GATT was found to be insufficient. I'll tell you why. There are reasons are there. GATT was found to be ineffective, insufficient in addressing all the international trade issues. And that is the precise reason what we did was, 1995, we merged, we basically took the GATT, expanded the scope and stated that we will have a new organization. GATT is an agreement. WTO is an organization. So we set up WTO, which started working from 1995. And GATT is basically now part of WTO. Any difficulty so far? Sir, what is the full form of the GATT? GATT stands for General Agreement on Trade and Tariff. GATT stands for General Agreement on Trade and Tariff. So this is the evolution, right? Basically the history behind it. Now, why was the GATT lagging? What was the problem with the GATT? Why did we shift to WTO? These are the reasons, right? Once again, these are the reasons. First one, GATT was simply an arrangement, was an agreement. There was no institutional structure. I hope you understand this. GATT, right, was a simply arrangement. It was an agreement between the countries. There is no institutional structure. Right? What do you mean by institutional structure here? Whenever you talk about WTO, there is a structure for WTO. I'll discuss that also. Have patience. WTO has a structure. GATT was simply an arrangement, agreement. Right? So that is the first point. Second one, it was focused only on the goods. Look at the name, automatically you'll understand. Right? General Agreement on Trade and Tariff. General Agreement on Trade and Tariff. Right? Don't you think? Looking at the name itself, you'll understand. It's focused only on the goods. What about intellectual property right? What about services, etc., etc.? Not covered. Focus on the goods. Third one, the number of countries which were part of the GATT, that was also very, very limited. For example, if you remember it, I said that when we set up GATT, 23 member countries were there. By 1994, there were 128 member countries. Is it okay? By 1994, there are 128 member countries. And today under WTO, more than 160 members are there. Dispute settlement was also very, very slow and right was very much right where basically settlement can be blocked. What is the meaning of it? I'll explain. Give me some time. Give me some time. Let's go point by point. Any difficulty? Fourth point I have not explained. I'm only saying. But any problem with the first 3 points? GATT was an arrangement. WTO is an institution. Right? GATT focused only on the goods. WTO will focus on goods, services, investments, intellectual property rights. Coverage is much, much wider. In number of countries, GATT covered 128. WTO has more than 160. Right? And the fourth point is basically dispute settlement. I'll tell about the dispute settlement. Give me some time. Now, after all of this, there is one student who says, what is GATT? And so imagine, after all of this, a student puts a comment, what is GATT? Right? GATT basically is an agreement. It is an arrangement wherein 23 members came together. They signed an agreement. That is basically GATT. Sir, is it 128 or 120? My dear, please read the slide very carefully. Over 120 countries. Over 120 countries means what? More than, right? More than 120 countries. And I said by 1994, 128 member countries were part of the GATT. Okay? Okay. And there is one more student who says, sir, right, you are not chilled. Don't worry, I'm chilled. But you need to revise. People need to revise. That's a concern for me. Okay, so this is the reason why we shifted from the GATT system to WTO. Now, what is the idea for WTO? Right? Why WTO is so relevant? Why WTO is so important? Let's try and understand it. So have a look at this. WTO has the following functions. First one, it will administer trade agreements. Trade agreements means what? You remember earlier, I used one name of the trade agreement. Do you remember the name of this? ASCM. That is Agreement on Subsidies and Countervailing Measures. Subsidies and countervailing measures. Which authority will implement provisions of this agreement? WTO. I understand. We have discussed all of it. At least one agreement we have discussed. We'll discuss more. Have patience. Which authority will implement, administer the provisions of this agreement? WTO. So that is the first very important function. There are many more agreements. Have patience. We'll look at them. It will also act as a forum for trade negotiations. You want to have trade negotiations with many other countries, right? Basically, it will provide a forum for this. Okay. It will settle trade disputes. It will settle various trade disputes. It will also review trade policies. For example, how did WTO come to know that India's trade policies are violating this agreement? Let me know. How do you think WTO came to know that India's trade policies are violating this agreement? Because WTO is reviewing, it is checking all the member countries' trade policies. Right? That is the role of WTO. Okay, done. So these are the functions. Now, I'll discuss one more very important concept here. The first very much slide. Understand this very carefully. Let's go point by point. Right. Have a look at this. Whenever you talk about WTO, there will be one term in the context of WTO, that is tariffs, trade barriers. Now, what do you mean by a barrier here? Barrier simply means restriction. I've written the similar word, right? Please understand this. Barrier simply means restriction. Now, why this term barrier is very important? For example, imagine there are two countries. Imagine there are two countries, A and B, and you are a manufacturer in country A. You will manufacture the bottle, export it to country B. Now, please tell me, if country B will impose more tariffs on the bottle, I repeat, if country B will impose more tariffs on the bottle, don't you think your exports will start going down? Let me know. If country B's government will impose more and more tariffs on the bottle, right, what do you think will happen to your exports? Exports will start going down. Can I call this as a barrier? Let me know. Can I call this as a barrier or a restriction which will disrupt the trade between country A and country B? That is basically the concept of barrier. Now, barrier can be divided into two heads. Barriers can be divided, right, separated, classified under two. First one, a tariff barrier. The first one is called as a tariff barrier. And second one is called as a non-tariff barrier. Tariff simply means what? Taxes. Already I've told you this. Tariff simply means what? Taxes. Now please tell me, by imposing taxes, can Government of India reduce exports? Think of it very carefully and answer this question. By imposing taxes, can Government of India reduce exports? Answer is yes. And is there a current affairs example for this? Please read about what Government of India is doing regarding sugar in the last 1 year. Please read about what is Government of India doing in order to control wheat export, rice exports, etc., etc., etc. So argument is simple. Although I gave an example of export earlier, that is, imagine your bottle is manufactured in country A, right, and you will export it to country B. So country B was imposing taxes on it. Imports into country B will go down. But by imposing the tariffs, even we can control how much exports are going from our country. Any problem with the first one here? Tariff barrier, any problem? Tariff barrier, right, either can be imposed on an export or it can also be imposed on import. And the whole idea is, by imposing a barrier like this, that's a tariff taxes barrier, that will basically either reduce exports or reduce import. That is, disrupt the trade. Shall I go to the next one? Sir, why Government of India is reducing export? Reason is very simple, my dear. What is happening to the sugar prices in India? What is happening to wheat prices in India? What is happening to prices of rice in India? If you're reading the newspaper, you would know that the prices are increasing. Now, you tell me, if you're the Prime Minister, prices of these commodities are increasing in the market, will you promote more exports from India? Think of it. If you're the Prime Minister and prices of these commodities are increasing in India, will you promote more and more exports? Some of you are saying yes, even now. Right? No, you are a very bad Prime Minister then. You're a very, very bad Prime Minister. You do not know how to make policies. Why? My dear, price of sugar is already very high. you will promote export, more exports will go from India. What will happen to price of sugar in India? Tell me, what will happen to price of sugar in India? Already prices are very high. Don't you think prices will become very, very high now? Will it not cause inflation in India? Think of it. Will it cause or not cause? Answer is simply yes. That is the reason, because the price of these commodities are increasing, we want to reduce the exports of them. We want to reduce the exports. That is the reason we are controlling exports. Done? So have a look at this. First one is, by using taxes, we can control imports as well as exports. Second one, anything except taxes. What do you mean by non-tariff? I have written in the bottom. Please have a look at it. Any barrier which is not a tax barrier, it is called as a non-tariff barrier. For example, let me ask you a very simple question. Imagine you're importing this bottle in India. You're an importer. Imagine you're importing this bottle. Government of India will allow you to import the bottle, but every year you will not be allowed to import more than 100 bottles. Let me know whether this makes sense or not. I'll repeat the example again. You are importing this bottle into India. Government says import it, but government will put a limit on it, that is annually only 100 units. Beyond 100 units, you will not be allowed to import. So question number one, if this is the policy, don't you think imports into India will go down? Let me know. That's the question number one. Don't you think imports into India will go down? Yes. Question number two, is it a tax? This policy that I gave you just now, is it a taxation policy? No. Can I call this as a non-tariff barrier? Can I call this as a non-tariff barrier? Of course, answer is yes. Now, can I give you a current affairs example? If you are exporting sugar from India, Government of India has put a limit, 6 million tons. That's it. I repeat, if you're exporting sugar from India, Government of India will put a restriction on the quantity of export, 6 million tons. Can I simply say this is a non-tariff barrier? Right? Does it make sense? Can I go forward? And this barrier that I'm talking, which is a non-tariff barrier, this is called as a quota. This is called as quota. Quota basically refers to restriction in the quantity. Can I go forward? Quota means restriction in the quantity. We are not focused on quality here. We are focused on quantity under quota. 100 units, 6 million tons, right? 500 kgs quantity, right? That is quota. Now, before I go forward, let me see, right, how you people actually analyze this. Which one is more effective barrier? Is it a tariff barrier or a non-tariff barrier? Think of it very carefully. Which one of these two is more effective as a barrier? Is it a tariff barrier or a non-tariff barrier? My dear, most of you are correct, but even a large chunk of you are wrong. It is a non-tariff barrier. Non-tariff barriers are more effective compared to tariff barriers. I'll explain. Understand this carefully. Imagine you want to import this bottle. Government will impose a tax of, let's say, 10% of it. 10% on the bottle. Tariff. It will increase this to 15%. What will happen to price of the bottle? Price of the bottle will go up. But let me know the answer now. Will you pay the taxes from your pocket, or will you simply transfer this burden to the customer, collect from them? You will collect it from the customer. And if there is a demand for this bottle in India, don't you think whatever could be the price, it will end up getting imported into India even at higher market prices? Yes or no? Does it make sense to you? Even at a higher prices, people want it. They will import it. Can I give you a best example? Gold. Don't you think large number of times, even though taxes on the gold is higher, people, the country will import it sell it in the market. You, me, your friends, your relatives, your parents will run to the gold shop every month on one day to purchase gold. I hope you understand this. So demand is there, doesn't matter. Even if the taxes are higher, people will purchase it. But on the other side, let's say Government of India will put a quantity restriction on it. Government of India says you are allowed to import, but only 100 units. Don't you think any way the import that is done will get restricted to 100 units only? That is the reason non-tariff barriers are much more effective. As a barrier, non-tariff are much more effective compared to tariff barriers. That's the first one, right? Let me go to the third one here. Exchange rate restriction. Exchange rate restriction. What is this exchange rate restriction? And I'll give you current affairs connection also. Listen to it very carefully. Imagine you're an importer. You want to import this bottle. So point number one, you need to convert domestic currency into foreign currency. Agreed? Because you're importing, you'll have to pay in dollars. You need to convert your domestic currency into foreign currency. Now, what if RBI, because of order of the government, RBI says, I will not allow you to convert rupee to dollar for purchasing this bottle. Let me know. What if RBI, on the orders of the government of India, will tell you, right, why you want to convert rupee to dollar? You will say, sir, I want to import this bottle. Then RBI says, sorry, I will not allow you to convert rupee to dollar. Please tell me, is it a tax? Is it a tariff policy? No, it is a non-tariff barrier. But will it restrict the flow of imports as well as exports? Of course, yes. It can have a huge impact. Sir, any current affairs example? This is exactly what is happening in Pakistan. Couple of months ago, this is exactly what was happening in Pakistan. Right? Please understand this. This is exactly what was happening. The Pakistan government was not allowing the buyers, the companies, etc., to convert the domestic currency into foreign currency. They did not allow it. Why? There were no foreign currencies only. I hope you understand. Right? There are no foreign currencies only. In that context, in order to minimize the conversion, they did not allow the currency conversion. Right? That is exchange rate restriction. Fourth one, administrative and technical regulations. The government will impose, government or any authority of the government, it will impose a certain standards such as certificates which must be met by imports. I'll give a very simple example. Imagine you want to import a car, sell it in India. Government of India will tell you, if you want to import the car, please show a certificate which says that the car is BS6 standard engine. Is it okay? The car has Bharat Stage 6 engine. Show me a certificate to prove that. Can I call this as administrative and technical regulations? Let me know. Can I call this as administrative and technical regulations? And I'll connect it to one more current affairs point here. I was mentioning about toys yesterday. One way that we have been able to control import of toys and export more toys from India is that most of these toys we used to import from China. This should not be, right? This should not be very, right, anything new to you. Most of these toys earlier we used to import from China. And Government of India now says, you want to import a toy into India? Go to one authority, submit a certificate that whatever toys you're importing, the raw material is safe for children. Simple. Whatever is used to manufacture these toys, please provide a certificate regarding that toy saying that this toy is safe for children. Right? Submit a certificate. Then I will allow you to import it. Can I call this as administrative and technical regulations? Can I call this as administrative and technical regulations? Right? So definitely yes. Using this non-tariff barrier, government can control exports as well as imports. And finally, government procurement policy. Government procurement policy. Understand this carefully. I'll take a current affairs example, and this scheme has been there in the newspaper very, very often in the last 1 week as well. FAME 2 initiative. FAME 2 initiative. Faster adoption and manufacturing of electric vehicles. This was there in the newspaper in the last 1 week. Read it, important. Now, one of the conditions under the FAME 2 is that there is a requirement called as localization requirement. Localization requirement. Now, what do you mean by localization requirement? Imagine, right, this is what Government of India says under FAME. You are manufacturing electric vehicle. You are manufacturing electric vehicle in India. Government says 50% of the components, I repeat, 50% of the components that you have used, you should purchase it from domestic market only. I'll repeat it again. Current affairs example, FAME 2 initiative. Government says 50% of the components that you purchase to manufacture this electric vehicle, you will have to purchase it from India only. Which means, tell me now, are we not reducing the import of these goods into India or not? That is, let's say hypothetically, this was one of the product. Don't worry, it's not bottle now. This was one of the product which earlier I used to import, use it in the manufacturing of electric bike. Now, because Government of India says 50% of the components I'll have to purchase, no concession, right? 50% you'll have to purchase, which means rather than importing this bottle, I'll purchase this from the domestic market and use it to manufacture the bike or car for that matter. Are we restricting import of certain components here? Please do let me know. Are we not reducing import? Are we not putting restriction on the imports here? Answer is yes. Can I call this as government procurement conditions? Government policies, right, in order to procure certain components in the market. Done? So these are basically, right, the trade barriers which can be in the form of tariff as well as a non-tariff. Tariff as well as non-tariff barriers. Okay. Next one. FAME 2 repeat. There is an initiative of Government of India, faster adoption and manufacturing of electric vehicles. And is it okay if I say, if you want to manufacture electric car, you'll have to purchase components. All of you understand the term components? Inputs. Government of India says 50% of the components that you purchase, you'll have to purchase it from the domestic market, which means half of the components, if I'm purchasing from the domestic market, I need not import. I cannot import these from the rest of the world, which is reducing the import value into India. Okay. Okay. Let me go to the next one here. What is the structure of WTO? What is the structure of WTO, World Trade Organization? What is the structure? Under WTO, the highest decision-making body, it is a ministerial conference. Remember this. Under WTO, the highest decision-making body is a ministerial conference. What is a ministerial conference? It is generally conducted. It is generally held once every 2 years. And please understand, I'm using the term generally, right? There's no compulsion. It is generally, traditionally conducted once every 2 years, right? Under which all the ministers from member countries, will come together, have a discussion, deliberate, and come out with an agreement. Very simple. I'll repeat it again. What is a ministerial conference? Right? It is generally, conventionally held once every 2 years. During this meeting, all the member countries will be represented. Ministers will go there, have a discussion, and they will come to certain arrangements. They will, let's say, introduce a new agreement. They will make certain changes to existing policies, etc., etc., etc. That is basically the idea of a ministerial conference. But next is the question to all of you. Do you think the ministerial conference has sufficient time to take care of day-to-day activities of WTO? Think of it. Do you think that the ministerial conference has sufficient time to take care of day-to-day activities of WTO? Sir, what do you mean by day-to-day activities? Imagine you need to review the policies of Government of India. Do you think ministerial conference will be called? All the members are very free. That is generally, please understand, there are two people who are asking who will represent a ministerial conference from India. My dear, it is a trade. You tell me, it is a trade. So which minister will represent India here? I hope you understand. Please do not keep on asking these questions. Please, Arya Baba. Trade. When it is trade, you think finance minister will go. Think of it. When it is trade, finance minister will go. No, my dear, minister for commerce. Arre Baba, how difficult it is. Right? In a conference where trade is being discussed, you want to send finance minister. Does it make any sense to you? Let me know. Does it make any sense to you? No. The trade minister has to go there. The minister for commerce has to go there. Right? Again, please, these are all basic common sense things. Right? Again, please understand. Right? It's like saying, sir, World Bank meeting. There's a meeting of World Bank. We'll send defense minister. Does it make sense to you? Right? The defense minister could be very, very strong. The strongest leader. Yes. Right, sir, we'll send defense minister in the World Bank meeting. No, my dear, finance minister has to go there. Right, so, right, understand the logic. Now, WTO, highest decision making body is the ministerial conference. Now, below ministerial conference, right, they cannot meet every year, every day, you know that. There is one group called as General Council. And have a look at this. All the member countries will have one member. Right? All the countries who are the members of WTO, one person will be representing these member countries. One person each from all these member countries will be present in the General Council. General Council every now and then will review the policies of the member countries. Then this is called as a trade policy review body. Is it okay? I'll repeat it again. General Council that itself will review the policies of the member countries. It is called as a trade policy review body. And every now and then, generally once in a month, etc. like this, they will start, right, asking if any member countries have got complaints against others, then that will act as a dispute settlement body. So this is a TPRB, this is a General Council, and this is a dispute settlement body. Okay, can I go forward? Can I go forward? Sir, who are members in the General Council? My dear, Government of India will appoint one person, right, one diplomat from India to represent India in the General Council. Okay, that is basically the structure of WTO. That is basically the structure of WTO, World Trade Organization. Now, under WTO, I said multiple agreements are there. Before understanding the agreements, let's understand certain principles. Right, let's understand certain very important principles, that is basically which are used by WTO in, right, discussing, deciding policies, member countries implementing policies, etc. The most important principles of WTO are: one, most favored nation, national treatment, and free trade. Understand this very carefully. One is a most favored nation, second one is a national treatment, third one is free trade. Now, what is the meaning of the term most favored nation? It's a very, very misleading term. Please understand this. Most favored nation is very, very misleading. Why I'm saying misleading? If I ask you, right, imagine all of us are sitting in a classroom. If I point at you and say, what do you mean by most favored nation? Most of you will start answering like this. Most favored nation simply means a country which is favored by us. That is how generally our, right, universities will teach us. But it is misleading. It is wrong. What is the concept of most favored nation? Let me explain it to you. Imagine there is country A. Country A is conducting trade with B, C, and D. Country A is conducting trade with 3 other countries, B, C, and D. Now, please tell me, should country A discriminate amongst all of them, or should country A have the same policy for all of them? Let me know. Right, I'll repeat the statement again. Should country again don't introduce any exceptions, etc.? I will tell you what are exceptions to this. Go point by point. Right? Country A is conducting trade with three other countries, B, C, and D. That is, right? Imagine similar bottles are manufactured in all the three countries. Similar. If this bottle will move from country B to country A, if government of country A will impose a tariff of 10%, then automatically they should impose the same tariff if the bottle will come from country C and if it will come from country D as well. There should not be any discrimination. This policy is called as most favored nation. If you understand, right? Many of you misunderstand the term most favored nation. Most favored nation simply means there should not be any discrimination amongst your trading partners. If you're basically giving most favored nation status to, let's say, 100 countries, if this bottle will come from 100 countries, then the tariff policy should be same for all of them. It is a policy of non-discrimination. Any problem here? It's a policy of non-discrimination. Now, understand the next point carefully. Do we provide most favored nation status to everybody? Answer is no. I hope you understand. Do we provide the most favored nation status to all the countries? No. For example, for Pakistan, we have not given most favored nation status. Now, you please tell me, right? Understand this carefully. This bottle is coming into India from country B or country C or country D. The tariff rate will be same, 10%, 10%, 10%. Now, let's say similar bottle will come to India from Pakistan. Can government of India impose 50% tariff on this? Is it allowed? Can government of India impose 50% taxes on this? Is it allowed? Answer is yes. Listen to the lecture carefully, my dear. Listen to the lecture carefully. What did I say? For Pakistan, we have not given most favored nation status. We have not given most favored nation status, which means, can we have the same policy with Pakistan? Can we have the same rate of taxation on the goods which are coming from Pakistan? No, I can have more rate. I can have a higher rate of taxation on goods coming from Pakistan. Right? So understand the logic here. Most favored nation simply means non-discrimination. You cannot discriminate amongst your trading partners. And those are trading partners with whom you have not given the MFN status, you are allowed to discriminate. Is it okay? You are allowed to discriminate. Now, are there any exceptions to this? Are there any exception? Is this policy of non-discrimination always applicable? No. Right? There are certain exceptions to this. For example, are you reading the newspaper? India-Australia trade agreement. India-Australia trade agreement. My dear, you please tell me now, if there is a trade agreement between India and Australia, and if this bottle will come from, right, Australia into India, government of India, because of this trade agreement, I repeat, government of India, because there's a trade agreement, can reduce the tax, let's say, to 0%. This kind of discrimination is allowed. Is the logic okay with you? This kind of discrimination is allowed. Why? Why is it allowed? India and Australia have an agreement. They have an agreement. So automatically this kind of discrimination is allowed. But on the other side, understand the next point as well. India does not have a free trade agreement with USA. Have a look at this. India does not have a free trade agreement with USA. And let's say there is one more country with which India does not have a free trade agreement. The trade agreement is not there. Then if this bottle will come from USA as well as a country X, government of India has to have same tariff policy. Can you understand now? Policy of non-discrimination, policy of discrimination. Right? Whenever agreements are there, whenever MFN status is not given, you can have a discriminatory policy. That is, you can have different rates, different policies altogether. But when you have right MFN status given to other countries, these countries have to be treated the same way. There shall not be any discrimination between all these countries. That is most favored nation, MFN. Second one is a national treatment. Second one is national treatment. That is whether a good or a service, either you can talk in terms of goods or services. This good, let's say, is imported into India. And before importing, I repeat, before importing, you imposed a tariff on it. You imposed import duties on it. Yes or no? Now, once this bottle has landed into India, Government of India cannot discriminate between the good which is imported and the similar good which is manufactured in India. I'll repeat it again. Please understand this carefully. Do not be confused. You can apply this to either a good or a service. And trust me, when I go to the next point, trust me, all of these have certain exceptions. Do not complicate it. Understand the basic points here. Right? Understand the basic points. What is the idea of a national treatment? I'll repeat it again. Imagine this bottle is imported into India. So obviously already government has imposed a tax on it. And a similar bottle, similar product is manufactured in India. The government of India cannot discriminate between both of them. That is called as a national treatment. Can I go forward? Can I go forward here? Any issue? Third one is called as a free trade. Third one is called as free trade. Sir, what is a discrimination? My dear, you will have policies in favor of one and against another. Can I give you a very, very simple example? If you are the youngest son or a daughter in a family, don't you think your parents will have a policy of discrimination in favor of you? Let me know. Right? Whatever they do, it is always in your favor. And if you are the eldest son in the family in a rural part of India, don't you think policies in the house are in favor of, that is discrimination, but in favor of the eldest son? I hope you understand. So argument is simple. Any policy, procurement policy, or it could be taxation, any such policies, you cannot discriminate between, right, basically the imported good as well as the good which is similar manufactured in the domestic market. That is called as national treatment. Third one is free trade. You will have to lower the trade barriers so that more and more trade can be conducted. Lower the trade barriers so that more and more trade can be conducted. Done? So these are certain very important principles on which World Trade Organization will actually function upon. Okay. Next one is certain agreements under WTO. But before that, let's take a break. Let's address your questions. Then we'll take a break. Then we'll continue the discussion. Okay. Now, but then all the countries could do this and provide incentives in other sectors other than export. Then what is the effect of WTO's policies? Now, please tell me, do you think all the countries will be able to promote manufacturing? Think of it and please let me know. Do you think, just like Government of India is doing, all the countries around the world will be able to promote manufacturing by providing incentives? Is there a proof with you? Don't you think many countries will have limitation on the finances? For example, let me throw a name at you and tell me, is it possible for them? Sri Lanka. Tell me now. Do you think Sri Lanka will be able to promote manufacturing just like Government of India is doing? No, my dear. Right? So again, understand this. Even if they're promoting, let's assume, right, according to your hypothetical situation, let's say all the countries are doing. Please tell me, do you think all the countries will have the same labor that India has? Possible? Do you think all the countries will attract the same amount of investment that India will attract? Possible? No. There's so many factors. Okay, always remember that. Sir, is electricity coming under the ambit of GST? No. No, electricity is out of GST. In fact, there is a list of it. I believe it is there in the slides. Please have a look at it. Electricity is out of GST. Sir, government can restrict to one person saying you can import only 110, or it is as a whole that is that this product is imported only 110 as a whole. Government can have a restriction for overall import. Government can also individually impose a restriction. It is a policy of the government, entirely left to the government. Okay. So remittance of tax isn't just manipulating loopholes in SCM. No, I've explained this already. Under the MEIS scheme, right, we did not provide the remission of embedded taxes. We did not do that. Government simply provided incentives based on the value of the export. Whereas in case of RODTP, at least as of now, because if that was basically violating SCM, some or the other country would have gone to WTO, filed a complaint against India. So what is the status as of now? RODTP is not export linked subsidy. It is an initiative where embedded taxes are remitted back. Hence, we are not violating SCM. Why will inflation affect exchange rate when it only affects purchasing power? My dear, if inflation if inflation happens, simple example, if you are a manufacturer of this bottle, please tell me, if inflation happens, will the market price of the bottle increase or not? Market price of the bottle will increase. And when the market price of the bottle will increase, what will happen to exports? What will happen to exports? Will you be able to export more and more? No. And whenever inflation happens, the purchasing power of the currency changes. I hope you understand. This bottle in India, let's say 10 rupee. Let's take a very simple example, 10 rupee. Imagine you have 20 rupees now, or I'll take 60. You'll understand in a minute why. Right? Because of inflation, imagine the price of the product goes up from 10 rupees to 12 rupee. But a similar bottle manufactured in another country will still cost you 10 rupee. Now, don't you think, because the purchasing power has gone down, because the purchasing power of your domestic currency has gone down, rather than purchasing 5 units, you'll prefer to purchase 6 units? Yes or no? All of this is very technical. But let me know, right? The bottle that you are manufacturing in India has gone up. The price has gone up from 10 rupees to 12 rupees. That is inflation. And right, if you have 60 rupees, the purchasing power of 60 rupees has gone down because of inflation. Will you purchase the bottle at 12 rupee or will you import the bottle at 10 rupee now? What would you prefer? Automatically, you'll choose the second one where you will import more. Right? So now tell me, if imports will start increasing, what will happen to exchange rate? Don't you think exchange rate will also get affected? Automatically, yes. We have discussed all of this yesterday as well. Okay. Any other questions? Export of quantities by government of India is for India. Okay, I've answered this. Custom duty on imported goods is paid by Indian or foreign manufacturer. My dear, if you are exporting, you will collect it from, right, the importer on the other side. If you are importing, you will basically pay, right, and you will import it. That is how generally the transaction is conducted. What is India's status in trade? What status are you asking? I don't know what is the status that you are referring to here. Sir, how will the government control exports by increasing tariff? Simple. Right, same bottle. Right now the price is 100 rupee. Imagine government will start imposing or increase the tariffs from 10% to 20%. Simple question to all of you. The government will increase the tariff, that is on export of the product. Let's say 0%. Right now 0%. But government will impose 20%. Don't you think now the market price of the export will increase to 120? And tell me what will happen to the exports. Exports automatically will come down. Who paid expenses of WTO? My dear, WTO funding is there. Funds are there. But again, don't worry about it. Don't worry. Not at all needed. Sir, can free trade mean no trade barrier? Right? Generally, the argument is whenever you say free trade, right, argument is the tariff barriers and non-tariff barriers will be reduced and eliminated. Over a period of time, we will have to eliminate the barrier. What is HQ? HQ means headquarter. HQ means headquarter. Headquarter of WTO is in Switzerland, right? Geneva. There's a place called as Geneva. It is located in Geneva, that is Switzerland. Okay, right, done. So let's take a break now. Right, let's take a break. So I'll restart the session at 7:28. I'll restart the session at 7:28. Okay. Am I audible? Can we start? Okay, let's start now. Certain important agreements under WTO. One agreement we have already discussed. SCM. Do you remember this? Agreement on subsidies and countervailing measures. One we have already discussed. Let's look at certain other important agreements. GATS, TRIPS, and TRIMS. Let's go point by point and please understand this carefully. Do not try to read everything about these agreements. I'll repeat my statement. Do not try to read everything about WTO. Not at all needed for UPSC. Because people do their PhD thesis on WTO policies. And you want to read everything about WTO and appear for UPSC. That's not required. Trust me when I say this. That's not at all required. Just understand the basics and go forward. Now, second agreement is GATS. What is the long form of GATS here? General Agreement on Trade in Services. Okay, General Agreement on Trade in Services. Now, what is this idea of a General Agreement on Trade in Services? I'll come back to this. Please have a look at the picture. Plus tell me, is the picture visible to all of you? Let me know. Is the picture visible to all of you? I'll write numbers here. 1, 2, 3, and 4. Right, sir? Yes, picture is visible. Second, please observe all the situations. 1, 2, 3, and 4. Observe all the situations and just let me know. I'll discuss it. Please tell me, are all the pictures one and the same? Any of the two pictures are one and the same? Let me know, because when I explain it, some of you will say, sir, 2 and 4 are one and the same. Sir, 1 and 3 are one and the same. 1 and 2 are one and the same. Right? Out of all the 4 pictures which are given here, that is first one, second one, third one, and fourth one, none of the situations are same. Okay, as I was saying, one student says, sir, 1 and 2 are same. Please look at the arrow marks. Please look at the arrow marks. There's a difference of arrow mark. Let's start now. Whenever you talk about GATS, under GATS, what WTO does is, they will divide services. I repeat, they will divide the services into 4 classifications. They will divide all the services into 4 classifications. These are referred to as mode 1, 2, 3, and 4. Let's start. Mode 1, it is called as a cross-border supply. It is referred to as cross-border supply. Now, what is this idea of a cross-border supply? The consumer sits in country 1. The supplier is there in the different country. Across the border, this solid dotted line is nothing but border. Across the border, the services are transferred. But please look at it and tell me, is the customer crossing the border? I'm talking about only one. Look at it and let me know. Is the customer crossing the border? No. Right? Some of you saying yes. My dear. Is the customer crossing the border? Right? At least look at the picture. No, how difficult is it? Customer or consumer is there in the same country. Right? Is the supplier crossing the border? Is the supplier crossing the border? No, supplier also remains in the same border. Only services are getting transferred. Only services are getting transferred. Sir, any example? Have you heard of customer services provided from India? Call centers. Let me know. Have you heard of the concept of call centers? Right? That is basically customer service center will be present in India. Customer will be sitting in USA. So the customer will call from USA and let's say Indians who are working in these call centers will pick up the phone and answer the queries. Is it not cross-border services? Let me know. Is it not cross-border services? Are you crossing the border to answer to the questions of the customer? No. Is the customer coming to India to ask a question to you? No. Right? So basically that's the idea. Cross-border. Go to the second one. Consumption abroad. Go to the second one, consumption abroad. That is, let's say you're a customer, you will go to Bali trip, you'll go to Bali, Indonesia, you will go to Switzerland, you will go to USA, you will go to Dubai. Now please tell me, when you go to Dubai and start consuming services in Dubai, such as transportation, such as hotel, restaurant, etc., don't you think customer has crossed the border? Services are there in the same country, but customer has crossed the border. Any difficulty here? Consumption abroad, please follow the arrow mark here. Here is the customer. Customer will cross the border, go to second country. Now supplier will not cross. Supplier is there in the same country, but you will cross the border and start using the services. That is consumption abroad. Third one, commercial presence. Commercial presence. A foreign company will come to India, set up a company in India. A foreign company will come to India, set up a company in India, and start providing the services to all of us. So in third case, that is a commercial presence. What is happening? Customer is not crossing the border, company is crossing the border, coming to the second country. Right? That is basically the commercial presence. For example, have you heard of Air Asia company? Let me know. Have you heard of Air Asia company? Air Asia is a service provider. Is it an Indian company? No, it is a foreign company. Have you heard of Bennett Coleman? Bennett Coleman is basically the company which owns Times Now. So foreign company coming to India, providing services in India. I'm talking about only services, not goods, services. Right? So that is basically commercial presence. Fourth one, right, that is a presence of natural person. This is country A, country B, and this is a natural person. Natural person means citizen. I'm a citizen of India. I'm a natural person of India. You're naturalized citizens of India. Now, in the fourth example, what will happen is, I will cross the border. Let's say this is Australia. Simple example. Let's say this is Australia, this is India. So I am a naturalized person of India. I will cross the border, go to Australia, work as a chef in Australia. Let me know. Work as a chef. Right? You can take an example of a chef or yoga instructor, etc. So I've crossed the border. I will go to the second country and I'll start providing services by becoming a natural person of Australia. Or else, I will cross the border. I will join a company and this company will provide services to the citizen here. Right? This is basically the concept of presence of natural person. These are the four types of classification of services. Four classification of services. Right? Generally, any services that you can talk about, right? Any services that you can talk about, you will fall under one of these services. Again, you'll have to focus on international trade here. Don't say, sir, what if, right, I'm there in India, I will use Ola services in India. Is it international trade? Let me know. Right, you are there in India, you will book Ola Auto. Is it international services? No, you are an Indian citizen, you are consuming within India. But what if Ola will go to Britain? What if Ola will go to Britain, set up a company in Britain, start providing services to Britain citizens? Please tell me what I'm talking about. I'll repeat the example here. Let me check how much you have understood. Ola will go to Britain, open a company in Britain, and start providing services to Britain citizens. Am I talking about mode 1, 2, 3, or 4? Which mode am I talking about? I'm talking about mode 3, my dear. Some of you are saying mode 4. Ola is an individual. What is your logic? Ola is an individual. Right? Don't you think chef is an individual? Yoga instructor is an individual. Is Ola an individual? No, Ola is a company. And when company will cross the border, is it presence of natural person? No, it is right, commercial presence. Right? Is it okay? Can I give you one more? I'll ask you one more question. Think of it and answer. Foreign, right? Foreign citizen will come to India for healthcare treatment. I'll repeat. Foreign citizen will come to India for health treatment. Think of it. Is it mode 1, mode 2, mode 3 or mode 4? Right, for health treatment means what? Hospital is a service provider. Hospital is not going anywhere. Hospital is not going anywhere. Some of us saying mode 4. My goodness. My dear, who is the service provider? This is the difficult part. You don't listen to the lecture very carefully. Here is a patient and here is a hospital. Okay. Here is a patient, here is a hospital. Who is a service provider? Patient is a service provider. Those who are saying mode 4, tell me, is a patient a service provider? Then how can you say 4? Does it make any sense? Now, if hospital is service provider, hospital that is a service provider remains in India, the customer will go to the service provider. M2, M3, M4 and M1. Is it not basically M2? Is it clear now? Is it not M2 here? Right, so understand who is the service provider, who is the consumer, that you should be very clear. I'm saying a patient goes to the hospital, you're saying mode 4, sir. In mode 4, the service provider will cross the border, but the service provider is an individual. Unlike mode 3. In mode 3, service provider will cross the border, but this is a company. That is basically the 4 classifications. Okay, 4 classification. All these 4 are covered and I've given examples here. Please have a look at it. Please have a look at it. Whatever I've discussed so far, it is there in the table. Please have a look at along with the examples. Okay, now GATS will focus only on the services. That should be very clear to you know. GATS will focus only on the services. What kind of services? Those services which are traded in the international market. Now, under the GATS, we divide them into 4 classifications, 1, 2, 3 and 4. Now, let me ask you a very simple question. Should Government of India apply MFN status to these services or not? Let me know. Should Government of India, should it apply the principle of MFN when these services will come from, let's say, UK, Germany, right? Let's say USA. Yes or no? Some of you are saying no. My goodness. Right, this is the most difficult part that I've generally I don't face issue with these concepts, but I don't know in this batch I'm facing the issues. Right, should you not apply MFN status to the services if they come from USA, Germany and UK? If you do not apply it, do you think they will leave you? Let me know. If you are the Prime Minister, services will come from USA and UK. You will discriminate against one and you will not discriminate against another. Do you think UK will leave you alone? Of course no. You will have to apply MFN statement. You will have to apply national treatment. You will have to apply or you will have to comply with the transparency measures. What do you mean by transparency here? Government of India has to submit documents, policy documents to WTO. That is basically idea for transparency. That is GATS. Can I go forward now? Can I go forward? That is GATS. Second one is TRIPS. What is a TRIPS? Trade related aspects of intellectual property rights. Now let me ask you straightforward here itself. Imagine a foreign company will come to India and this foreign company is from USA. Another company is from UK and they have patents. Should you extend MFN status to both of them? Let me know. Should you extend MFN status to both of them? Again, some of you saying no. My goodness. Right, what is your argument? Those who are saying no, I do not want to take the names because some students will basically say, sir, you are harassing me. Those who are saying no, please tell me what is your argument. And those who are asking, sir, what is MFN? My dear, where were you half an hour ago? Let me know. What were you listening to half an hour ago? Most favored nation. We have covered everything. I'm not introducing anything new to you. We have discussed it. That is, let's say a company from USA will come to India and a company will come to India from UK. Don't you think you'll have to apply MFN status to both of them? You cannot discriminate. You'll have to treat them same. That's the whole idea of TRIPS. That is intellectual property rights. And some of you are asking, sir, what is intellectual property? Let me give a very basic idea here. Intellectual property simply means creation of the mind. I repeat, intellectual property simply means creation of mind. For example, let me know patents. Is it a creation of the mind or not? Okay, patents, is it a creation of the mind or not? What about copyright? What about copyrights? Is it a creation of the mind? Right, I hope you understand this. So whatever is the creation of the mind, it is called as intellectual property rights. Now imagine you have created a patent. That is, let's say, a technology, right? You have created with your own knowledge, you have created a technology. Don't you think you should only have the right to use the technology? Does it make sense to you or not? Right? If you have created a technology, don't you think you should be allowed to use the technology? Can everybody use the technology and start manufacturing in the market? Then nobody is going to invest in the technology. For example, I'll give a very simple example. Current affairs, all of you will understand. Many companies in India invested in creating vaccine for the COVID. I hope you understand. Many companies in India invested and created a vaccine, and that is a patent. They have a patent of vaccine. Should everybody start using the same formula to create vaccine? Then if your answer is yes, sir, everybody should be allowed to use that, let's say, formula. Then next time, who is going to invest? Think of it. Next time, who is going to invest? That is the reason certain protection is given to intellectual property rights. Certain protection is given to intellectual property rights. And those protections will be implemented under the act or under the agreement which is called as TRIPS. Trade related aspects of intellectual property rights. It will apply to all the WTO members. It will provide a uniform legal protection to creation of mind or intellectual property rights, such as patents, copyrights, industrial designs, etc. Can I go to the third one? Fourth one here, TRIMS. Trade related investment measures. Trade related investment measures. Now, before I go forward, one student basically retorted or told me that, sir, why do you discourage us? Right? We are not graduates like everyone. My dear, you don't have to be a graduate to understand this. I hope you understand my statement here. You do not have to be a graduate to understand all these concepts. Right? It's not that if you have a certificate which proves that you are a graduate, only then economics you will have to understand. Or only they will have the intellectual capacity to understand economics. No way. No way. I'm basically saying we have discussed MFN. Two companies from two different countries will come to India. Should we apply MFN or not? Some of you are saying no. Right? Don't you think that that's basically counterproductive to what we are discussing? Right? So understand, keep focusing on the discussion. Okay. Now let's start. Let's start with the fourth one. Trade related investment measures. TRIMS. Trade related investment measures. I'll ask you the same question again. You're the government of India. Should you have a favorable policy to promote investment from only domestic market? Should you have one more policy to discourage foreign investments in India? Should you have it? Let me know. Right? For example, tomorrow, let's say you become prime minister. Right? Let's say you become prime minister. Right? You want to promote investment only from the domestic market. First and foremost, is it good? Those who are saying yes, tell me, is it feasible for a country such as India? Right? Some of you have become already diplomats. Sir, maybe we'll do that. If your argument is yes, sir, I will do that, tell me, for a country such as India, can you become a developed country by promoting only investment from the domestic market? Can you do that? Can you achieve that? Answer is no, my dear. You cannot. Right? And India doesn't have sufficient capacity in the domestic market to invest. I'll give a very simple example. There is a policy of Government of India called as National Infrastructure Pipeline. We'll discuss that next week, don't worry. National Infrastructure Pipeline. Under National Infrastructure Pipeline, Government of India wants to invest more than 110 lakh crore rupees. 110 lakh crore rupees. Now, do you think Government of India has that amount of money? Do you think private sector in India has sufficient amount of money? No, you will have to attract a lot of foreign investment. But beyond this point, let's say some of you will simply say, sir, what if we have the capacity? Correct. What if you have a capacity? In that case, right? In that case, can we basically prohibit foreign investment? If you do that, imagine you will say, an investor coming from USA, investor coming from UK, I will not allow you to invest in India. Don't you think UK government will do the same thing with Indian companies? Let me know. Don't you think the UK government will do the same with Indian companies? Tata will go to UK, government of UK says don't come into UK, go outside. And if Tata asks UK government why, they'll simply say, look at your own government. That's the reason there is a protection. There is a protection even for investment. That is for production of goods and services. For right investment, etc., certain protection has to be provided by respective governments. Every government should have policies in order to promote not only the domestic, right, not just domestic, but they should also allow foreign investments. They should provide protection to these kind of foreign investments. That is basically trade related investment measures. It is focused on protection of investment. It is focused on promotion of manufacturing of goods, etc. It refers to the rules that the government will apply on foreign investors as a part of industrial policy. That is, whatever policy you are implementing, do not discourage, do not prohibit foreign investors. Promote, protect even the foreign investors. That is basically TRIMS policy. Any problem with this? Any problem? Can I go forward? And two of you are basically asking, sir, what is the long form of TRIPS, TRIMS and GATS? The first point under every rectangle is the expansion. The first point under every rectangle is the expansion. So then in case of China, what we have done, my dear, please understand this. Always remember, I've been telling you this, again I'll repeat it. Always remember, there are always exceptions. There are always exceptions. For example, I said free trade should be promoted. Please tell me, should we keep on promoting free trade at the cost of domestic inflation? Let me know. Should we keep on promoting international trade at the cost of domestic inflation? No. Because if you remember, one of the principles of WTO is promote trade. Promote trade. But don't you think Government of India, by imposing restriction on sugar exports, on right wheat exports, it is not promoting trade, it is discouraging trade. So that is the precise reason. Please remember, there are exceptions on security, right, on security purposes, for let's say protection of the domestic, etc. In certain circumstances, governments are allowed to impose policies which are opposite to these agreements. Okay, shall I go to the next one here? Now, what is this idea of a dispute settlement? Right? Why do we say under WTO dispute settlement takes place in a much better way compared to GATT system? Follow this very carefully. Very often this is cited in the newspaper. Point number one, what do you mean by dispute? Imagine from India, certain product is going to USA. Let's start. From India, certain product is going to USA. Government of USA will impose barriers on the product. Government of USA will impose barriers on the product. Question number 1. Now, will India's exports increase or decrease to USA? Let me know. Will India's exports increase or decrease to USA? It will start decreasing. And 755, congrats, you're the Prime Minister. Will you be happy with this situation? Will you celebrate it? Will you say, what a great policy of government of USA? Let's celebrate it? Absolutely no. You will ask government of USA, what is the reason? Why are you imposing the barriers? Please tell me. And they'll simply say, this is the reason, this is the reason, this is the reason. You're not happy. So what you will do now? Right? There is one body under WTO called as a dispute settlement body. Right? Dispute settlement body. Right? India will file a complaint at dispute settlement body. Right? They'll file a complaint at DSP. What is the first step? And generally this is allowed. In the dispute settlement body, they will call the member countries which have a dispute. They will ask the member countries to negotiate and deal with the dispute. Right? They'll basically say in a common language, in a layman language, right? Both of you are grown up, please resolve the dispute amongst yourself. Right? That is basically the first step. Now let's say both India and USA, which have a dispute, they are not able to come to any conclusion. They're not able to come to any agreement regarding the dispute. Now what will happen? Now again, both of them will go to WTO dispute settlement body and say, we are not able to resolve the dispute, you only resolve it. Now what will happen? The WTO will appoint an expert panel. They will appoint an expert panel. That is generally 3 people who are experts are appointed into a committee panel. Now this panel will study, conduct an inquiry and submit a report to the dispute settlement body. Now please understand the next point carefully. Imagine this panel says the policy of USA is correct. Whatever is the policy of USA, they have not done anything wrong. They are absolutely correct. Now, don't you think in this situation, India will not be happy with the report? Let me know. In this situation, India is never happy with the report. Now, there is one more option available to you. That is, under dispute settlement body, there is one more authority called as appellate body. Under this, there is one more body called as appellate body. India, what they will do is, India will approach appellate body. And now, appellate body will look into the findings of the panel. They will not investigate. They'll simply look into what is the finding of the panel, what the panel says. Either they will say panel is correct or they will simply say panel is wrong. Whatever the findings, right, whatever the report says, either the report is correct or report is wrong. And let's say hypothetically, the body says report is correct, which means policy of USA is correct. India cannot complain against this policy. They will have to accept the policy of USA. Now, the member countries in the dispute settlement body will vote. And please understand, until and unless, I repeat, until and unless every member country will vote against the report, report will be accepted. I'll repeat it, slightly technical, understand this carefully. Until and unless every member of dispute settlement body will vote against the report, report by default will be accepted by the dispute settlement body. There is a term called as negative consensus. Can you understand the term here? Negative consensus. What do you mean by negative consensus? Every member under the dispute settlement body will vote against the report. Everybody, every member will vote against the report. That is called as a negative consensus. Now, please think of it and let me know. Do you think you can easily get negative consensus under WTO dispute settlement body? Think of it. Can you get negative consensus under the dispute settlement body? No. Why? Imagine everybody will vote against the report. Will USA vote against the report? Think of that as well. Imagine every member will vote against the report. Will USA vote against the report? No. USA will accept the report. then you do not have negative consensus. That is the reason. That's the reason, right? A DSB may accept or reject the appeals report, right? So dispute settlement body, this is what the dispute settlement body will do, and this is how disputes are settled under WTO. And generally, understand this, generally for the whole process to be over, it takes somewhere around 12 to 15 months. Generally, for the whole process to be over, it will take around 12 to 15 months. Time-bound dispute settlement is done. Unlike GATT. In case of GATT, no time limit was there. I hope you understand. Understand the difference here, right? WTO GATT. There was one point of difference. In GATT, dispute resolution did not happen smoothly, right? There was no time frame. The dispute settlement can be easily stopped, blocked by member countries. Here, can India stop the dispute settlement? Let me know. Can India stop the dispute settlement? No. Can USA stop the dispute settlement? No. Right? Until and unless both the countries will go to dispute settlement body and say, we want to withdraw, we want to negotiate, the process will happen. Right? Until and unless there's a negative consensus, that is not going to happen. Right? The dispute settlement will be done like this. Now, let's say, right, rather than report being in favor of USA, what if the report is in favor of India? That is, if you remember the example, India will export the good, government of USA has imposed a barrier, now we have taken USA to WTO. Now what if the report says India is correct, USA is wrong? Now what will happen? Right, what will happen if USA says, right, no, I will not withdraw the barriers, we will keep the barriers as it is? Then what is the solution to this? In such cases, India can take retaliatory measures, start targeting the exports which are coming from USA. Is it okay? I'll repeat it again. In such a situation, that is, let's say the report says USA is wrong. Appellate body also says USA is wrong. And dispute settlement body will accept the appeals report and say USA is wrong. Now in that situation, what if government of USA says, I will not withdraw the barriers, I will continue with the barriers? In such situation, now India can be allowed. India can take the permission of WTO, start targeting goods or services which are coming from USA. Right? That is basically how we will ensure that whatever are the findings of the appellate body, they are followed by the member countries. Can I go forward here? Can I go forward? Now there is one current affairs point. What is the current affairs point? Appellate body. Come to appellate body. In the appellate body, as per WTO, 7 members have to be there. In the appellate body, 7 members are supposed to be there. And please understand, each of the members, that is experts, will have a term of 4 years. Will have a term of appointment, right? Appointment, I'm sorry, after the 4-year term is over, appointments have to be done. But whenever appointments have to be done, you require consensus. Whenever an appointment has to be done, you require consensus, which means, imagine out of 7 people, 1 person will retire, 4-year term is over. Now you want to appoint 1 person into the appellate body, you require every member country to accept the appointment. You want everybody, that is every member country, to accept the appointment. Now please tell me, if USA will not accept, there is a term called as veto. If USA will not accept it, can you appoint a replacement here? Let me know, right? If USA will not accept it, all the other countries are accepting. If USA will not accept it, can you appoint a 7th person? Not possible. Now, think of it. USA continuously has kept on vetoing appointments. 4-year terms will keep on getting over. Don't you think the number of members in the appellate body will come down from 7 to 6, 5, 4, 3, 2, 1 and 0. Today, if you try to see how many members are there in the appellate body, the number of members in the appellate body is 0 people. Absolute big 0 people. Nobody is there in the appellate body. And what is the issue with this? USA says the WTO is not working to protect interests of USA. Whatever WTO says, right? Most of the times it is opposed to the interest of the USA. So what we will do is we will oppose it. We will also keep on opposing until unless you make certain changes in the WTO. As a result of this, the appellate body has basically come down from 7 people to 0 people. And the problem, right? The next problem is whenever any country or a party takes the case to the appellate body, you require 3 people to take it up. Any case that will be going to the appellate body, 3 experts will come and they will take up the case. That is a requirement. This is called as quorum. Is it okay? This is what is the quorum. This is requirement. Now, when you have 0 people in the appellate body, will you have quorum? Let me know. When there is a 0 people in the appellate body, can you get quorum? No, you cannot get. Or some of you are saying yes. How is that possible? Those who are saying yes, please tell me, how is that possible? Will you create 3 people right out of thin air? Simply out of thin air like this you will do, 3 people will come and sit. No, my dear. People are 0. You need 3 people. How can you get quorum here? You cannot have quorum. And when you don't have quorum, tell me, don't you think all the cases will get stuck up at appellate body? Is it okay? All these cases will get stuck up at appellate body. And this, understand this, this is being used by many countries, including India, by the way. This is being used by many countries, including India, where, right, where they know that the panel finding is opposed to their interest, they will simply say, we will go to appellate body. Right, I hope you understand. We'll simply go to appellate body and file an appeal in the appellate body, because nobody is there in the appellate body, there is no quorum, and this cannot be taken up. This simply cannot be taken up. And this is referred to as appealing into void. Whether have you seen this in the newspaper, yes or no, let me know now. This is referred to as appealing into void. Very, very famous now. This is referred to as appealing into void. That is, you know that it's like a black hole. What will go there? Because nobody is there in the appellate body, nothing, no result you will get. So you will simply appeal it into the void. That's it. Right? Have you read this in the newspaper or not? Right? India, right? India and UK for that matter. India and UK, this is exactly what is happening. Okay? Sir, but you have written 7 members. My dear, the total people that they are supposed to be present are 7 members. All of them will have a tenure of 4 years, which means if somebody is appointed in 2020, their tenure will get over in 2024. If you appoint somebody, then the number will again become 7. But in 2024, USA will not allow you to appoint anyone, which means number cannot be 7, it will come down to 6. Same way, 5, 4, 3, 2, 0. Right now, how many people are there in this appellate body? 0 people. Done. So this is basically the idea of a dispute settlement and the current affairs issue regarding dispute settlement. Done. So next one is the concept of SCM. We have discussed this. Subsidies and countervailing measures. Under the subsidies and countervailing measures, that is basically an agreement. Any country which has a per capita income of more than $1,000, it is not allowed to provide export linked subsidy. And India has a per capita income of more than $2,000. And second point here is, imagine electronics, right? Or let's say mobile manufacturing. Let me take a very simple example. Mobile manufacturing, it is one of the sectors. Is it okay? It is one of the sectors. Now, if the total value of the mobiles that India manufactures and exports to the international market, I repeat, the total value of mobiles which are manufactured in India and exported to rest of the world is equal to 3.25% or more than 3.25%, then Government of India should not provide any export linked subsidies for mobile manufacturers in India. Is it okay? Can I go to the next one now? First condition, second condition, anyone is applicable. Next one is the farm subsidy. In the context of farm subsidy, there is one more agreement on agriculture. there is one more agreement on agriculture, and we'll discuss the concept of agreement on agriculture tomorrow. Please have a look at this. Can you see the last line? Please read the last line. Will be discussed under the concept of subsidies, which is the next chapter, which is very much the next chapter. Done. So these are certain very, very important aspects related to WTO. Now, one more concept here, economic integration. Right? I'll connect a lot of current affairs here. Understand this carefully. One more concept, economic integration. Now, what is the meaning of economic integration? It is a policy. It is a discriminatory policy wherein member countries in the group will either reduce or eliminate trade barriers. Understand this carefully. What do you mean by economic integration? It's basically a discriminatory policy wherein within the group, that's very important, the member countries will reduce or eliminate the tariffs. For example, please tell me now, India and Australia have a trade agreement. Yes or no? India and Australia have a trade agreement. India and USA, right? India and USA, do they have a trade agreement? No. India and USA do not have a trade agreement. Now let's start. Imagine you will manufacture this marker. Can you see the marker here? Stylus, marker, whatever it is. Right? Imagine you have this marker, you have manufactured it. You will export this from Australia to India. And there is one more similar manufacturer sitting in USA. They will export it from USA to India. Please tell me, will India charge the same tariff on both of the goods? Let me know. Will India charge the same tariff on both of the goods? Absolutely no. No, my dear. No, we have discussed this already. India will not charge. Why? India and Australia have a free trade agreement. Don't you think in this situation, government of India might simply say, I will discriminate. My policy is I will discriminate in favor of Australia against USA. That is, when this marker will come from Australia, I will impose, let's say, 0% tariff on this. And if it comes from USA, I will impose, let's say, 10% tariff on it. Why? Why is this being done? This is one group. Simple. This is one group. Two countries are there. And these two countries are deciding to have discriminatory policies for each other. Any problem with this? These two countries, that is bilateral, two countries, they have discriminatory policies favoring each other. India will discriminate in favor of Australia. Australia will discriminate in favor of India. This is basically the concept of economic integration. Now, there are different levels of economic integration. One is called as a preferential trade agreement. Second one is a free trade agreement. Third one is a customs union. Fourth one is a common market. Fifth one is economic union. Let's go point by point. First one is a preferential trade agreement, PTA. What is this preferential trade agreement? Two or more countries will form a group. Any problem with this? Two or more than two countries will form a group. For example, here two countries are there. This is called as bilateral. Done. This is called as bilateral. Instead of two countries, let's say three countries will form a grouping. It is called as a trilateral. And going forward, they'll simply use the term multilateral. Any difficulty here? Bilateral means only two countries. Trilateral means three countries. Multilateral means many countries are there. Shall I go forward? For example, right, many of you ask, sir, any example of a multilateral trade agreement? Very simple example. Have you heard of RCEP? RCEP, Regional Comprehensive Economic Partnership. Have you heard of a BIMSTEC? That is again a regional agreement only. Have you heard of, right, many of these agreements, Mercosur? Right, majorly what happens is, many countries come together and they will have a trade agreement. That is called as a multilateral trade agreement. Now come back to this. Preferential trade agreement. What will happen in preferential trade agreement? There are two countries or more than two countries. They will find out very few of the goods or services and they will sign an agreement to reduce the tariff on very few of these goods and services. Let me know, I'll repeat it again. Understand this very carefully. Right? Imagine there are two countries, A and B. Both these countries, A and B, will come together, sign an agreement. And what is the agreement? They are going to cover very few, not all, not many, very few. And there is no number for it. Don't ask me few means how many, 2, 3, etc. No. Very small number of goods and services will be covered in the agreement. And right, generally, this will cover only part of the total trade between the countries. That is basically the concept of preferential trade agreement. Two or more countries agrees to reduce the tariff on number of products. And there is no defined number here. Don't ask me how many. Right? It will not cover, let's say, 80% of the trade. No, it will not cover 99% of the trade. No, small part of the trade. It will not be covering larger trade. That is preferential trade agreement. Next one, free trade agreement. Free trade agreement. Best example for this in the current affairs is India and Australia. Right? India and Australia. And if you have been reading the newspapers, you would know that most of the trade, more than 90% of the trade that is done between India and Australia will be covered under free trade agreement. I'll give you one more example. India and UAE, United Arab Emirates. Do you know that? India and UAE have signed a free trade agreement wherein they're saying more than 90% and more than 90% of the trade that is conducted will be covered. Now tell me, if 90% trade is covered, 99% trade is covered, 96% trade is covered, can I say most of the trade is covered? Is it okay? Most of the trade is covered. And whenever most of the trade between the countries is covered, this is called as a free trade agreement. This is called as free trade agreement, FTA. Best example in the current affairs is, it is basically India, Australia, free trade agreement. India, UAE, it's a free trade agreement. But if you read the newspaper, rather than using the term just free trade agreement, they will use very technical terms. For example, they will say comprehensive partnership economic agreement. Have you heard of this? CEPA, CEPA, comprehensive economic partnership agreement. And they will also use one more term, right? Comprehensive economic cooperation agreement, SECA, CEPA. These kind of terminologies are used. Do not be confused. Please do not be confused. What is the basic idea? Whenever you talk about free trade agreement, you're talking about goods and services. Is it okay? You're talking about goods and services. Most of the goods and services which are traded between India and Australia are covered. Correct. Comprehensive. But why this is called as a comprehensive economic partnership or comprehensive economic cooperation agreement? Why not directly FTA? Reason is simple. Whenever you talk about FTA, it focuses only on goods and services. It focuses on goods and services. But when you say comprehensive economic partnership agreement, comprehensive economic cooperation agreement, we will cover goods, we'll cover services, we'll cover intellectual property rights, we'll cover investments, right, etc. Now, don't you think when you will go beyond goods and services and start covering all of them, we'll call it as a comprehensive agreement? Let me know, right? If I go beyond just goods and services and start covering investments, start covering intellectual property rights, is it not comprehensive agreement? Yes, that's the reason these kind of technical terms are used, right? So free trade agreements where substantial trade is covered, two or more partners will agree to eliminate tariffs. Example of this, India and Sri Lanka FTA, India and Australia FTA, India and UAE FTA. Let me go to the next one. Customs union. But tell me, first and foremost, tell me what is the meaning of customs? Please tell me, what is the meaning of the term customs? Customs is nothing but taxes imposed on trade. That is, whenever goods will come into India or go out of India, government will impose certain taxes. That is called as customs. That is tariff. Now, have a look at this. India and Australia is a group. This point is clear to you? As per FTA that we have signed now, India and Australia is a group. Now, please understand the next point carefully. If India will conduct a trade with USA, right now, India has its own customs duties. If Australia will conduct a trade with USA, Australia also has its own tariff policy. Correct? Is the statement correct? So that I can go forward. Because right now, India and Australia have decided, if from Australia something comes to India, how government of India will treat it. And from India something goes to Australia, how government of India, Australia will treat it. Now, because of such arrangement, what Australia will do with USA's products, that is their policy. What India will do with USA's products, that is India's priority. But what if I say, next step, what if I say, India and Australia, both which are there in a group, will have a common tariff against USA? Let me know. What if India and Australia will come together now? They will say that both of us, when we will trade with USA, both of us will have same tariffs with USA. Don't you think this is a union? This is a customs union. Let me know. Please look at the term and tell me, is it not a union of customs? Right? That is, group of countries will have the same tariff policy against non-members. Simple. Group of countries, that is, members in the group, will have same customs against non-members. That is customs union. Right, sir? Any example for all the 3, 4, and 5? European Union is the example. European Union is the example. Remember, only one example. Multiple are there. Don't by heart. Remember one, more than sufficient. Let me go to the next one. Common market. Let me go to the next one. Common market. What is common market? India and Australia is there in a customs union. As per this example, I repeat, India and Australia, imagine it is there in a customs union. Now, between India and Australia, investments will start flowing very easily, freely. There is no restriction. Investment will come from Australia to India, India to Australia. People, that is in search of jobs, they will move from India to Australia and Australia to India. Now, this is called as common market. Common market is a customs union where there is a free movement of labor that is allowed. Free movement of capital that is allowed. Right? For example, European Union. Please tell me, within European Union, if you are the citizen of, let's say, Germany, can you get relocated into another country and search for a job? Yes or no? Right? Can you move the investments very, very easily across all of this? Don't you think this is one of the reasons why Britain said, I want to move out of European Union? Just go back, understand economics with international relations now. Don't you think this is one of the reasons why Britain said, I do not want to be part of this union? Why? People from other countries are moving into Britain, snatching away our jobs. Our citizens are losing jobs. So what I'll do? I will move out of the union itself. That is called as a common market. Okay, next one, economic union. Next one is economic union. Economic union is a common market where all the countries within the group will have same monetary policy, will have same fiscal policy, will have a common currency, etc. That is called as an economic union. It is a common market having common monetary or fiscal policies, shared executive, legislative, judiciary body, etc. That is called as economic union. So this is how integration will keep on increasing. This is how integration will keep on happening. Right? One is a PTA, then there is a FTA, then there is a customs union, then there's a common market, then finally there is economic union. Any difficulty here? Can we go forward? Is there any time limit for FTA and PTA? Is it an agreement? My dear, this is an agreement. Until unless both the countries basically say we want to nullify the agreement, agreement will be in implementation. Okay, right? So this is basically the idea. Now, the one point that I want to mention regarding this is, can I, in terms of, let's say, complexity, increasing integration and increasing complexity, can I write the increasing complexity structure like this? The most simplest integration level will be PTA. Most simplest out of all of them. Most simplest will be PTA. After that, we'll have FTA. After that, we'll have a customs union. Then we'll have a common market and then economic union. Can I simply say, as we keep on moving towards the bottom, integration will increase? I repeat, as we keep on moving from top to the bottom, right, integration will keep on increasing. Complexity in the structure will also keep on increasing. Okay, that is basically the concept of integration in the economy. Done? Now, before I wind up for the day, right, I'll give a very simple example. Right, one more concept is there within free trade agreement. Within free trade agreement, there is one more concept. There is something called as early harvest. There is something called as early harvest. Now, what do you mean by early harvest here? Very often you will come across the term early harvest. Those who are writing economic union, please listen to the lecture carefully. I've already given an example. European Union is an example of all the three. Remember one. Why do you want to remember so many examples? You think UPSC is going to ask you 10 examples of all of these unions? Why are you wasting your time? Early harvest. And if you want to get the examples, these are there in the books. Get it. Okay. Now, what is the meaning of early harvest? Let me give a very simple example. Imagine you go to write UPSC exam. You'll open the paper. Please tell me, will you solve the questions sequentially without considering difficulty level? Or first, you will solve easiest ones. And last, you will keep most difficult. Let me know. This is the simplest way to make you understand. You are writing the exam. Will you keep on going sequentially? Until and unless I solve the first question, I will not go to the second. Until and unless I solve the second question, I will not go to the third. Will you do this? Or you'll simply keep on scrolling. Okay, I know this. Right round it. I know this. Round it, round it, round it. Then maybe at the end, you look at the most trickiest of the questions. Don't you think all of you will follow the same thing? Now apply the same logic to two countries, X and Y. Right? There are two countries which are negotiating trade agreement. Imagine if there are 100 goods and services for which they need negotiations. Don't you think some of the goods and services will require more time, more negotiations, etc.? Let me know. Right? Don't you think out of 100 goods and services, there will be certain goods and services which are very, very tricky. Right? You require more and more time for negotiations. And on the other hand, let's say out of 100, there are, let's say, 20 goods and services. There are 20 goods and services. Easily, both the countries X and Y, within, let's say, 10 days, they will agree to the tariffs on 20 goods and services. Now, my question to all of you is, out of 100, already for 20 goods and services, you have decided what should be the tariff. You have easily agreed within 1 week. So my question to all of you, if you are the Prime Minister now, please tell me, will you wait negotiations to be over for all the 100, then sign the agreement, or you will simply tell the other person, other Prime Minister, sir, for 20 already negotiation is done. Let's sign the agreement for 20 and remaining we will cover it later. Don't you think the second one makes more sense? Think of it. Don't you think the second one makes more sense? That is 20 goods, easily you have arrived at a decision. You will sign one agreement, and for remaining 80, you will continue negotiation. Once the negotiation is over, then you'll expand the agreement from 20 to 100. Right? That is basically called as early harvest deal. This is referred to as early harvest deal. What's the basic idea of early harvest trade deal? Out of all the goods and services which are to be negotiated, those goods and services which are easier to negotiate, the countries will sign the agreement. Right? And for remaining, negotiations will continue. That is called as early harvest trade deal. Done? So this is basically the idea of economic integration. Now, if you have any questions, this is where I'm going to stop. If you have any kind of concerns or questions, please do let me know so that we can address the questions, then wind up the discussion. Yesterday's newspaper covered European Union environment policy which affects exports. Is not violating the provisions of WTO. Again, very, very tricky area. Why? I'll tell you. Even government of India does not know what kind of impact it will have on India. It's more of an ecological concept. They're saying certain goods which will cause carbon emissions, and these goods will come into European Union, will impose a tax on it, tariff on it. Right? That is basically the idea of a carbon tax. So that's a very tricky area. A lot of negotiations are happening. It is supposed to come into force after a couple of years. Very, very gray area. Neither we know nor they know. Right? We are saying it is going to violate. Let's wait and see what other countries will do, whether they will drag European Union to WTO or not. We'll have to wait and see. Okay. Sir, we forgot different names and names of different committees because I'm new to economics. Please give advice and I'm college student. My dear, everybody, whoever is preparing, this is my sincere recommendation to all of you. Make a list of committees. Simple, make a list of committees. For example, how many of you have read today's newspaper and have you come across the term Kanungo Committee? BP Kanungo Committee. Let me check. How many of you have read today's newspaper and come across BP Kanungo Committee? Right? It was there in newspapers. It was there in the newspapers. You can check it, by the way. Right? This is a committee which was set up by Reserve Bank of India to look at customer services. And they've given recommendations. Now see, I've discussed RBI. RBI is over. Suddenly there's a current affairs topic regarding RBI. I'll give you one more example. In today's newspaper, there was one article where RBI has introduced a new system where they are going to measure financial inclusion. Yes or no? Those who have read the newspapers, please do let me know. They've introduced a new system where they're going to measure what is the level of financial inclusion in every state. A new system has been introduced by RBI. Suddenly UPSC will ask a question on that. RBI is over, but current affairs, so many important concepts are coming. That is the reason. Please read newspapers, make a list. And before you go to the exams in the last 1 week, keep on revising, keep on revising, keep on revising. That's it. Right? Hardly from economy, maybe around 10 to 15 committees will become relevant for 1 year. Keep on revising in the last 1 week. That is what would be my recommendation to you people. Okay. Under national arrangement, why same arrangement for foreign and domestic goods? My dear, you cannot differentiate. You cannot discriminate. That's the whole idea. You cannot discriminate between a good that has come into India, right, from the foreign market and the domestic manufactured good. If you discriminate, right, tell me, is it going to promote international trade? Please have a look at it. If you discriminate, will it promote international trade? Of course, no. If you discriminate against UK's product, UK will do the same thing to your products. That is not going to promote international trade. Okay. Sir, questions. We'll have a discussion. Don't worry. Right. We'll have a look at the questions. The financial market questions are also there. We'll discuss that tomorrow. Don't worry. Okay. Anything else? Sir, can you discuss GATS one more? My dear, GATS we have discussed for around 10 minutes. What do you want me to discuss within GATS? Tell me. Rather than asking, discuss whole GATS. That's not possible. Sir, regarding dispute settlement, why Japan joins MPIA? Right? You have typed in the Google, suddenly MPIA is there. Right? Let me pick it up and throw it at the faculty. The idea of MPIA is an alternative dispute resolution. Right now, all of us know that, at least now you should know that the appellate body is dysfunctional. Appellate body is not working. So what is the solution then? What is the solution? Under the dispute settlement understanding, DSU, there is one section. Under that section, it provides for alternative dispute resolution mechanism. And this idea for MPIA is an alternative dispute resolution mechanism where more and more countries are actually joining. India is yet to join. India says we still have faith on the dispute settlement body that will be done. Okay. Common market. I'll repeat it again. In case of the common market, what happens is basically two countries, or let's say 5 countries are there in a group. Within these 5 countries, people can move easily from one country to another country. Within these, the capital can move easily. That's the basic idea for common market. I don't see any pending question from your end. For the earlier question from you, I have already answered. Please check your chart history and do ask if okay. Okay. Early harvest, I'll repeat it again. Early harvest simply means there are certain complex subjects which require lot of negotiations, lot of discussions. So WTO, right, basically provides this facility wherein it's an arrangement wherein member countries, rather than waiting for all the goods and services negotiations to be completed, which might take a longer period, they will pick up those areas where already negotiations are completed, enter into an arrangement. That is called as early harvest. Rather than writing, you are not answering my question, type your question. I am reading your comment. Rather than that, if you have typed your question, I would have answered it. If 2 or more countries we don't sign MFN, my dear, generally by default we'll allocate MFN, but we can withdraw. We can simply say this country I will not give MFN. If there is no FTA signed between 2 countries, then customs union can be formed or not. You tell me, is it possible? You tell me, right? Is it possible? You'll have to first sign an agreement, understand whether this is going to work for you or not. Then generally, again, please understand, it's not a hard and fast rule that you'll go from step 1 to step 2. Absolutely no. But please think of that also. Can you directly jump into a policy where, right, you're getting into an agreement with another country where you're having common customs? Think of that as well. Can you do that directly? Okay. If there is no appellate body, so how disputes are getting resolved? You please tell me, did I say that disputes are getting resolved? You tell me, did I say disputes are getting resolved? If you have checked the slide, you would know that I've written a term called as appealing into void, which means a dispute resolution has become dysfunctional. Okay, done. Let me stop the discussion today here. We'll continue with the discussion. Tomorrow we'll start with this, India as well as a free trade agreement. Okay, so let me stop the discussion today here. So take care, revise, please revise. If you don't revise, then basically you'll keep on forgetting everything as we keep on moving forward. So that's it for the day. Take care. Good night. See you tomorrow.